Basically flat futures, flat yields, a little bit off in oil. Coming up, Dr. Albert Koh, Yale University School of Medicine, Department Chair and Professor of Epidemiology and Medicine, 7:30 a.m. This is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
COVID-19 pandemic has hit the U.S. economy hard.
But the damage has not been evenly distributed.
Now comes the challenge to rebuild more equitably. Join us for a Bloomberg special report, The Unequal Recovery, on Bloomberg Television.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds. And that would put more downward pressure on long-term interest rates.
I think checks are the most efficient way to provide support for the economy right now.
We still have momentum, but we are losing momentum at a critical time.
We're looking for a reboot and a restart and a recover, and I think that's really the theme for next year.
The biggest stimulus that's going to come is the vaccine.
Once the vaccine arrives, put on your seatbelt. I think this economy could really rip.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Bloomberg Surveillance. We welcome all of you on Bloomberg Radio, Bloomberg Television, a Christmas Eve simulcast. All of the Bloomberg world getting ready for Santa to make a visit. No one more than Lisa Abramowitz, who joins me here on Christmas Eve. Just to start, Lisa, with the basic truth. This is the oddest Christmas Eve ever.
Yeah, I mean, you even made your own Baby Yoda to put on the top of your tree at Legos last night. It was really a tremendous exercise. And let me tell you, I just want to congratulate you. You did a fabulous job, Tom.
Thank you. I worked on the tree for absolutely hours. It took at least 3 martinis to put that puppy up. There are 2 headlines out moments ago. We've been waiting for a press conference from board Boris Johnson and maybe Ursula von der Leyen in Brussels. And I got two headlines I don't know what to make of. Brexit deal being held up as both sides haggle over fishing. Officials unclear how long delay in Brexit deal will last. I mean, Lisa, help me.
Evergreen headlines, Tom. I mean, basically, have we not been dealing with this story again and again and again? There might be a deal. Fisheries is a problem. There's a deal on fisheries. Just kidding. We have a deadline of the 31st. We're going to drag it out until then. So John Farrow has to come back and actually deal with this, despite the fact that he tried to foist it on us, Tom.
I just walked out of my hermetically sealed studio here, and one of my entourage tackled me, I say.
With a mask.
To go over.
Socially
with a mask, with a Brexit coverage going on. Where are we in this hour, this 7 o'clock hour in New York? And I said, I really don't know. And folks, that's where we are. Where we are, we'll get to the data here. 136 on pound futures. Well, they're up a little bit. And again, markets closing 1 and 2 p.m. as well. Lisa, and I thought Dr. Fauci was just brilliant yesterday with David Weston, but the most piercing question morning was from one L. Abramowitz. You talk about lining up the morning. Can we go bowling? I mean, I thought that was really an important estimate of where we are in this pandemic.
I was wondering when you were going to start ragging on me for that one. Look, I think that everyone's looking for activities, and you start wondering, what's the sliding scale of safety? Is it okay to go to the park and be with friends with a mask on, socially distanced? Is it okay to go to the grocery store? And then what are the parameters? These are important questions, especially if you're looking for activities over the holiday.
If you're looking for something to do in the next 3 hours.
Theoretically.
Well, we know, of course, across this nation, 1 million vaccines already been taken. We've done a lot on that. We've got some good guests to speak to on the pandemic this morning. Very quickly through the data, and there's not much going on. Sterling 135.89 has come back a little bit. Maybe those two Bloomberg headlines moments ago giving pause to what was a 136. Sterling curve not doing much, bonds not doing much. I do want to point out Turkish lira giving us some news flow is Mr. Erdogan, and this is a new Mr. Erdogan, making very clear he will defend lira, and they do that with an interest rate rise today. Lisa, what's your snapshot of what's going on in Washington? It is chaos.
Chaos is a good word for it. What I think is the most important takeaway is a fissure between President Trump and Republican leadership, really putting Mitch McConnell in a tough spot. Is he going to veto or is he going to override 2 vetoes by year end of President Trump's? What does that do for the Georgia elections? And it raises questions of whether the Republican Party really still is a Trump party or whether it is breaking away from the president, Tom.
An active Christmas Eve in Washington. We'll have coverage on that through all of the morning as well, up to David Weston's balance of power. Right now on the markets and where we are and into 2021, he has been of wonderful advantage to us this year. Patrick Armstrong is plurimi wealth and is exceptionally thoughtful of dovetailing the big picture into what to do with capital. Let me start narrow, Patrick. What is the what to do with capital into 2021?
I think you've got to stick taking risk. You can't be too conservative because central bank policy is punishing you if you're too conservative. Basically, you've got inflation swaps now, which are showing an upward trajectory. The market's starting to price in inflation above 2% over the next 10 years in the United States. And you've got treasury yields well below 1% still. So you lose purchasing power by sitting on the sidelines. And I think as long as that stays in place, and I think Jerome Powell is going to ensure that stays in place, taking risk, getting carry where you can get it, looking for growth where it's available. Those are really what you should be focusing on in 2021.
So underlying some of those comments is a negative real yield of negative 1.05% when you look at 10-year yields in the U.S. Basically, what you're getting for your money is you're losing money based on inflation. What would have to change with respect to growth, with respect to the economic recovery, for you to alter your view that this really pushes people into risk and rather should be sending a message that the economy is really going to struggle to take off after this pandemic hit?
Yeah, so our view, it's a consensus view, is that the vaccines will enable that economic recovery. I think we're going to have very sharp growth in the second half of this year. That's being offset by probably very weak growth to negative growth even in January and February with the lockdown measures that are in place. It's going to be the central banks that determine the path of asset prices in 2021, just like they have every year since QE got put into place. It's designed to help the economy, but what it does is it reflates asset prices. And I think there's no change in tone from any central bank about they think the playbook they're putting in place now is working. And I think interest rates get capped even if we do see that higher growth in the second half next year.
It's an arch concept, but Patrick Armstrong, if we get reflation, and Robert Albertson of Piper Sandler was just on with us looking at $11 and $12 trillion of all-in monetary and fiscal reflation, given a pandemic, does the reflation filter into the real, tangible economy, or is it financial effervescence?
Well, I think if Biden gets some of his policies through, that changes the dynamic from asset price reflation towards goods reflation. And basically, a lot of Biden's policies are designed to engineer cash going into the hands of consumers. So higher minimum wages, the fiscal stimulus that's being debated right now, whether it's $600 or $2,000, those kind of policies will create a real reflation in goods prices and the economy as well. Whereas the central bank policies, they were good for getting us out of the rut we got into. But right now, I think their efficacy is limited in terms of economic thrust.
Yeah.
It's really driving asset prices rather than the economy.
Exactly. This is a really important concept. It's why we love to have Patrick Armstrong on. And Patrick is just simple. These are balance sheet machinations almost, if that's the right word. They're like the machinery of balance sheet dynamics. What does it have to do with any part of GDP other than maybe a consumption pop?
I think it's very difficult to pinpoint what it's helping on GDP growth. What it's stopping is basically risk aversion, where everyone is just hiding and going into cash. Central banks are forcing you to put capital at work. That feeds through into the economy in the form of a wealth effect of the rich. And it does create I think it prevents the collapse of the economy rather than promoting growth. And I think we need policies now that really do promote that growth, because I think the collapse isn't necessarily behind us, but those risks have been mitigated over the last 9 months.
I love how Tom described it as financial effervescence, and you say that basically all this is doing is preventing people from caring about risk or being concerned about risk. What's the logical outcome of this, given the fact that typically when people stop caring about risk, bubbles happen, financial engineering that leads to other things happen. It creates a financial stability risk, no?
The Minsky moments, it is. It's basically everyone's in the same trade. People think they're diversified, but gold prices, credit prices, equity prices, Bitcoin prices are all being driven by the same thing. And while that thing is there, which is negative real yields, it works. If we do get into a scenario where central banks can't control the yield curve because either there's way too much debt and people start pricing in credit risk on the U.S. government, or there's way too much growth where nominal yields basically are being forced up, that's when things may start to change. But I don't think that's a 2021 story.
Okay, it's not a 2021 story, but the basic assumption here, Patrick Armstrong, is everybody's smoothly calibrated to come out of these negative real yields. Says who?
Yeah, I don't think it's going to end smooth, because I think central banks are showing no sign that they want to take their foot off the gas. And we're in an economy now that is recovering. They won't even say they're thinking about raising rates because they know how much that spooks markets. I think they're in an untenable situation. They don't know how they're going to exit it, and what they're going to keep doing is what they're doing for right now. And it's not going to end well, but I think while the music's playing, that's the direction for markets for next year.
Patrick Armstrong with us this morning. Thank you so much, with Plurimi Wealth as well. We're looking at Brexit headlines, 2 out at the top of the hour, challenging to say the least, and pound sterling confirms that. We had a 136 pound sterling, stronger sterling through the morning, and it's given way in the last 20 minutes. Sterling 135.90. These are little moves, but they go with a speculation of what we'll get out of Johnson and van der Leyen headline, and I believe in the zeitgeist right now, phishing is front and center, Lisa.
Yeah, it really ties into this question of political gamemanship and how this has been buffeting markets all year to the point where markets don't care anymore. And I think that, to me, is the big takeaway, that people are becoming numb to the will it, won't it deadline type story, which you're seeing in Washington, D.C., which you're seeing over in the U.K., and that seems to be just what we're experiencing deja vu with today.
I would focus from our experts, including Kevin Cirilli, that December 26th, I believe that's 48 hours away, plus or minus a Santa Claus. And I would suggest that December 26th is a really serious date for the American labor economy. Right. And if we don't get that, Lisa, what does the 27th look like, to be direct?
Although, to be fair, markets are shrugging that off because Democrats say they're going to introduce a new bill with a bigger check in the mail for Americans on the 28th if this bill is vetoed by President Trump. So the theory is people will get more money if this bill is delayed. Again, the delay matters. There is scarring. If people don't have those checks, they're going to continue to reduce their spending and struggle.
Futures up 7, Dow futures up 46. Coming up, Thierry Weissman, Macquarie Director of Global Currencies. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. President Trump has pardoned his 2016 campaign manager, Paul Manafort. Manafort had been convicted of financial crimes and illegal lobbying. The president also pardoned political advisor Roger Stone. He had already commuted Stone's sentence for lying to Congress. Also pardoned the father of the president's son-in-law, Jared Kushner. Charles Kushner was convicted of crimes that included witness retaliation. House Speaker Nancy Pelosi is hoping to seek unanimous consent to increase the individual payments in the stimulus bill as President Trump demands. But House Republicans are likely to block the attempt. That's according to a person who was on a call with GOP lawmakers. If the attempt is stopped, Democrats will introduce a new bill next week that would raise the payments from $600 to $2,000. The UK and the European Union have resolved their differences over fishing rights, and now they're set to unveil a historic post-Brexit trade agreement. Negotiators worked through the night to polish the compromise. The deal will formally complete the UK's separation from the EU 4.5 years after the 2016 referendum. And there's a new study about the mutated coronavirus strain that's been spreading in the UK. It says the virus appears to be more contagious and will likely lead to more hospitalizations and deaths next year. The variant is said to be 56% more transmissible than other strains. China is targeting billionaire Jack Ma's Alibaba empire in a monopoly investigation. At the same time, regulators have summoned Alibaba's affiliate Ant Financial to a high-level meeting over financial regulations. The pressure is on Ma in a part of a broader effort to rein in the increasingly powerful internet sector. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Lo tomé como una terapia. Realmente logró la contención que yo necesitaba en ese momento.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
The American people need relief. States and cities need relief. Transit agencies need relief. And the MTA definitely needs relief. The bill that was passed earlier in the week is incredibly important for the MTA, and the MTA is critical to the economic recovery of New York City.
From sea to shining sea, they are the essential workers. Patrick Foy, representing all of the MTA, he made clear with stimulus, the 2021 of the MTA is solved, and without it, it is a mess. Kevin Cirilli joins us now, our chief Washington Days of Our Lives correspondent, as the soap opera continues. Kevin, I've got all sorts of philosophical things to talk about. What gets done on Christmas Eve in your Washington?
The clock, setting of the clock. And in terms of the defense authorization legislation that the president has vetoed, candidly, Republicans were preparing for this for the past several weeks. There are the votes to override that veto. What's interesting is that coupled with the potential of a veto for the economic stimulus bill, Leader McConnell, Speaker Pelosi are going to have to be scrambling. I was dusting off the Schoolhouse Rock episode where you learn about a pocket veto in which the president could potentially do a veto at 11:59 and 59 seconds, in which case you're injecting a lot of uncertainty into the month of January ahead of the inauguration. I bring this up because I expect within the next 24 to 48 hours, Leader McConnell will be forecasting and foreshadowing, rather, much more clarity about the coming timetable. But over the weekend and Monday and Tuesday of next week are going to be incredibly important regarding the timetable for economic stimulus as well as defense authorization.
Well, let's go to that. And Kevin, folks, to be honest here, we could have Kevin on for like 3 hours today and not run out of things to talk about. Everybody knows we're benumbed by this. Kevin, for weeks, Lisa Bramlett and I have been looking at December 26 is a labor tipping point for this nation. Is that wrong?
No, it's not wrong at all. And I think the parameters of this debate, to be frank with you, is $900 billion or more in the overtime quarter, if you will, for the discussions. The president's not saying that he doesn't want to have economic stimulus. He's saying that there should be more for American families.
Yeah, but Kevin, what is going to happen December 27th at 10 a.m.?
Well, I think that from a Washington perspective, it's all about the timetable and when that vote is going to occur. And quite frankly, it likely could occur on the 27th or the 28th. I don't want to get too into the weeds, but the House is in what's known as pro forma sessions. And of course, the Senate set to reconvene. But management of the clock and time management, so important, especially for the chess move apparatuses that exist in the institution of the halls of Congress.
Let's talk about Mitch McConnell's Christmas dinner. Is he just going to be raging? What's he going to do going forward after President Trump's latest moves?
It's all about time management, and to be blunt, I mean, I think that from his perspective, he still comes out of this with a win. In the sense of the negotiations. I think much more focus and attention is being drawn into Georgia and the runoffs and the 1.5 million early ballots.
Wait, hold on a second. Kevin, I'm trying to reconcile how he comes off with a win. The compromise perhaps was a win to get to the Georgia election because supposedly it gave the Republicans a boost. President Trump now trying to put the kibosh on it and putting his weight behind another effort that actually hews closer to the Democrats. How is this a win for Mitch McConnell?
Well, I think when you look at how Speaker Pelosi had originally had upwards of $3 trillion, I think the calls in the Democratic Party about a reevaluation of the leadership that have grown more loud from the likes of Alexandria Ocasio-Cortez and other progressives who have started to openly question, and the teams around them and the political ecosystems around those types of figures who are openly questioning about the longevity of what Speaker Pelosi was able to continue to do and what she was not able to get out of the negotiations. I contrast that with virtually no conversations about people questioning where Leader McConnell goes from here. And the questions that the Trump political team is garnering. And I think that from those three teams' perspectives, four, if you include the incoming administration, the Biden administration, and the McConnell team, came out with more political capital than the other two sides, meaning Trump and Pelosi.
I remember you coming on earlier and saying that passing this $900 billion fiscal support package would help the Republicans in the Georgia election. President Trump weighing in on the idea that perhaps this is insufficient or a disgrace, a national disgrace, whatever language you want to use, does not necessarily help the Republicans. Does it actually take away that bump in the Georgia elections that this bill would have otherwise given them?
Well, I will gently correct and say that Leader McConnell argued to his caucus that the Republicans felt, and I was reporting that the Republicans felt that this would help them with their caucus. Now, the president has forecasted, based upon my reporting, that he has said that increasing the checks would be something that many Americans would be able to get on board with. And I go back to the start of this week, and Monday, when I was interviewing Congressman Bobby Heiss, one of the most ultra-conservative members. You can't get much more conservative, trust me, than Congressman Bobby Heiss, the Republican from Georgia's 10th Congressional District, who was at the White House with a dozen or so other ultra-conservatives inside of the White House with Vice President Pence as well as President Trump. And so if the president's able to sell $2,000 checks to people like Congressman Bobby Heiss, then they can be able to get the votes. But it's interesting to see the political tap dance that some of these 2024 crowds, Lisa, as you and I both know, this 2024 crowds of Republicans who are trying to get one step ahead of and to figure out where the base is. Well, where the base is still with President Trump. And so that's what's been an interesting tension, is that they're going from an old political playbook, and the president is saying that the populist streak that he's injected into the economic conversation about what's been going on is still going to exist.
I will say, Tom, I just got a gentle correction. That was just lovely.
I didn't want to be
perfect. It was no, I mean, honestly, I love it. Gentle correction. Tom, I think that this is, I actually feel like that was a correction wrapped with a bow tie, Tom.
There was some jargon there from Kevin Cirilli, which was out of control. When Pharaoh Abramowitz and I get together, none of us are on speaking terms. No. It's called a surveillance pro forma session. Just so you understand, that's what we call it as well.
I'm very sensitive to what I report being interpreted as my opinion, because I think there's too much of that in the industry.
No, we would never have that. Kevin, very seriously here, what is the lasting effect of pardons, clemencies, expungement? Does this just go away on January 20, or does it have a lasting effect within your world?
It has a massive lasting effect. You know, I was trying to think about this when this news dropped last evening, just about the significance from a historical context of the just take the issue of the 2016 election and the impeachment and everything. Without question, this will be studied by there will be books. There are books that are being written right now about this topic.
Kevin, thank you. Very generous of your time this morning. Under your tree, maybe you'll get an Eagles victory. Cirilli in Washington. Stay with us with Futures Up 8. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Good morning, everyone. Bloomberg Surveillance, Lisa Brownwitz and Tom Keene on a Christmas Eve. It's supposed to be quiet, sing carols, move on and all that. Nice casual lunch. Not this year. It is locked down in too many nations, watching this morning on television, listening on radio as well. And we welcome all of you to a continued news flow. The news flow today with futures up 7, short trading today, is on Britain across the Channel in the North Sea to the European Union, and hopefully a solution for Brexit. We've been waiting for a non-press conference. We've been waiting for hours for that. There is still squabbling over fishing rights, we are reporting. Maybe we'll hear from the Prime Minister and Ms. von der Leyen at some point. Right now, Joshua Hardy joins us. He is with the Confederation of British Industry in London, their Deputy Director General, but he is uniquely qualified to talk about what we're witnessing at Dover, because for 8 years before working with the CIB, he was with Tesco, which is a small grocery store with headaches every day on getting produce out there. Josh Hardy, you are uniquely qualified to speak about the position of business in England right now, a Tier 4 lockdown, Tesco just trying to get things done as it is. What do you perceive to be business into the end of the year and into January?
Well, I mean, we're all on tenterhooks here in the UK. We've been waiting for 4.5 years for a Brexit deal and for clarity, and now we've been hours away for about 24 hours. So the first thing is we are just desperately hoping that by the end of today, we get an announcement on that deal, because that matters so much for businesses. It is that certainty about the trading relationship with our biggest trading partner. What will that look like? Whether you're in food, whether you're in pharma, whether you're in services, absolutely critical. So let's get that deal over the line, because it is so much better than no deal.
The United Kingdom close that we see here, and of course sterling is what everybody's watching. Euro sterling so important to all in this great continental debate, but the cable we look at as well, 136 earlier, and it's ebbed away here on doubts of a press conference and over fishing rights as well. Josh Hardy, we're fighting for stimulus in America. Some would say it is income substitution. Is business receiving aid from the government in the United Kingdom quite different from what we see in the United States?
I think the principles are often the same, in that there's a principle that we set up here very early with the government around COVID and the pandemic, much more than around Brexit, of course, which was we're going to have to recover from this. And to recover, you need businesses ready to grow when the lockdowns ease. And they're going to need your help. So we've got wage subsidy schemes here, we've got tax deferrals, we've got a broad package of measures. But of course, we've now gone into this thing called Tier 4 lockdown across the majority of the country, which is a pretty full lockdown. So we need to keep an eagle eye, business resilience stripped away through the pandemic, of course, everywhere, not just here. If we're to be in this situation for the next few months, as that vaccine is rolled out, we need to protect as many businesses as possible, because they will what will power that recovery on the other side.
Is there a frustration, Josh, that fishing, even though it accounts for such a small proportion of the economy and the overall trade with the European Union, has dominated talks that have made life so difficult for the CFOs of the businesses you speak with?
I mean, yes and no. Of course, if you just put an economic lens on this, fishing is not a substantial part of the UK economy, and the rest of the economy can feel like it's being held hostage by something that is economically relatively small. But we know, we've been in this game for a long time. This is not just about economics. This is about sovereignty. And that is something that the government have to respect and have to work with. So having that control over fishing rights, being able to show that you do have sovereignty is we understand, important. But it feels like we are in those final last yards. They're always the hardest, aren't they? But it feels like a deal can be done where that sovereignty is maintained and where the rest of the economy can actually get benefits and grow. So can't say too much about it now, because there will be 2,000 pages of legal text that we get in our Christmas stocking to go through. But we hope that's there, and we hope it's over the line.
Josh Hardy, thank you so much with CIBC this morning. Ian Wishart, Alberto Nardelli, and Alex Morales reporting now for Bloomberg, summarizing the morning chaos in London, in Brussels. The headline, Brexit deal, it gets held up by last-minute haggling over fish, and I don't think they were deciding what to have for the Christmas Eve dinner. They go on with quite a lengthy article over the back and forth here as well. So we'll see if we get more news on that coming up through the morning. Sterling, 135.77, erodes further in the last hour. Terry Weissman with us right now with Macquarie, the director of global currencies. Terry, the money call right now is weak dollar. All my radar is up. What's your conviction on weak dollar?
Well, going into 2021, it's a fairly strong conviction. And as I keep saying, the European Union, the UK, the rest of the world effectively is doing a much better job of presenting itself to investors as a place where unity prevails. Look, even the news last night with regard to the US, where we can't even get this fiscal relief package done, just conveys a sense that there's a lot more disagreement and disunity in the U.S. than there is the rest of the world right now. And I think that's been a major theme that's been hurting the dollar in the last few months. And it's a theme that can continue to hurt the dollar in the next few weeks until the U.S. Shows to the rest of the world that it can get things done.
This is actually a contrarian take, Terry, because a lot of people were saying that the weaker dollar stems from a risk on feel, a global reflation trade, which would benefit other currencies. You're saying that's not the case, that it's incompetence of the U.S. government?
No, I think that there has been, as part of the weak dollar story, a few themes that have been relevant. Risk on has been one of them, for sure. But let's keep in mind that the dollar started weakening back in June. It was, while people were still very hesitant to jump back into the markets, very concerned about COVID still and the depth of the recession. But it started to go down just around the time that the European Union got its act together with regard to fiscal policy, or at least with regard to what they're going to do in 2021. There was this whole issue around the fiscal program, the rescue and relief facility in the European Union. That's when you started to see the dollar start to weaken. So I think that is still part of the story. Of course, since then, there's been other things that have been hurting the dollar, and one of them has been the general risk-on tone. But let's keep in mind that right now, you have a session in the U.S. where stocks are barely up, and yet people still talk about a weaker dollar. And I think part of that is the differences that we're seeing in governance between the rest of the world and the U.S.
Your point's well taken. It should give people some degree of pause when you have complete political dysfunction, as a lot of people have described what we've seen over the past few weeks in Washington, D.C., or you could go for longer than that. But there's a question of what this does to foreign demand for U.S. debt as U.S. tries to borrow as much money as they can to plug the deficit in productivity here. What do you expect for next year in terms of foreign demand and how that will affect the negative real yields that we see right now?
Well, when you speak of foreign demand for U.S. assets, you have to break this down into bonds and equities. And equities are still a growth play, if you will, and bonds are a yield play, if you will, just trying to capture or eke out a few nickels and dimes here on these very low yields we're getting. Yields in the U.S. are not attractive. Let's face it. If we're talking about foreign inflows, I can't really see how foreign investors, or for that matter, domestic investors, are going to continue to be enamored of the bond market in the U.S. at a time when yields conceivably could rise because of strong growth. So the growth outlook, the risk-on outlook, does not make for a positive picture for foreigners buying U.S. bonds. However, if you believe in risk-on and you believe that growth will resume with the good news emanating from the vaccines and the vaccine distribution, you have to imagine that to some extent foreigners and domestic investors will continue to invest in stock markets and in U.S. stocks in particular. So it's a balanced view, of course, and it usually always is. There's some asset classes that will do poorly in this risk-on environment, and some that can continue to do well.
If you're just joining us on radio and TV, Terry Weissman with us with Macquarie here. We're watching sterling with a lift up here, the optimism of hours ago through 136, a stronger pound sterling. Right now giving way with a vengeance, 135.66. These are little moves, but it is a thermometer of the expectations of London and Brussels. Terry Weissman, I'm absolutely fascinated, given the always stochastic nature of weak dollar, where countries react and they start jawboning for a reversal of that trend. They're strong currencies. If China's normal, is the renminbi a normal dynamic? Is the renminbi, does it move like a normal strong currency against the dollar, or is it its own different beast?
It's its own different beast because it is still managed in large part, at least on a day-to-day basis, by policy officials in China. So it is not subject to the normal market influences that other currencies would be. But to some extent, it still is. This is not 100% one way or the other, and it never is with any of these currencies. And we can continue to see inflows into China push lower marginally the dollar yuan. But I don't think this is going to be a big story in 2021. In effect, the reason why the renminbi has done well in the last few months and weeks is twofold. One is that China has emerged from their recession earlier than other countries, and certainly they have drawn investor flows into their financial markets. And second is the so-called Biden effect, something that you and I have discussed on this program before. Once we saw that the Trump administration would not be holding power in the U.S. post January 20th, people got a little bit more confident on the China story. China would not be the victim, or let's say the subject of more import tariffs from the U.S. And that's helped the story for China, certainly in the eyes of foreign investors. But these stories are really behind us. I guess that's the point, right? We all understand that China has emerged from this recession earlier, and we all understand the Biden effect at this point.
Right.
And that's why you have to look for the international story in other places.
Very nice briefing. Thank you so much. Terry Weissman, Dr. Weissman, thank you so much with Macquarie today with yuan through 6.54. Remarkable path for Chinese strength this year. Coming up, and it was a question in every home last night about vaccines and about mutations. We need a briefing on America's vaccination program. We do that with Dr. Ko of the Yale School of Medicine. Futures up 4. Futures give way a little bit from strength earlier. Sterling 135.73. Stay with us on radio, on television. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Republicans are likely to block House Speaker Nancy Pelosi's bid for $2,000 relief checks. That's according to a person who took part in a phone call for Republican House members. Pelosi took up President Trump's demand for larger payments to individuals in the Coronavirus Relief Act that Congress passed. She wants to seek unanimous consent to increase the payments, but all it takes is one lawmaker to stop that. President Trump has vetoed the $740 billion U.S. defense policy bill that set off a battle with Congress that could result in his first override by lawmakers. The president called the measure a gift to China and Russia. He wanted to attach to the defense bill an unrelated provision to eliminate the law that protects tech companies from liability for most content published by users. And global merger and acquisition activity came roaring back in the second half of the year after being at a near-decade low. Deal volumes are now down about 6% for the year to $3.5 trillion. Still, about two-thirds of those deals were signed since July. Bloomberg's learned that digital payment company Square has held talks about buying Jay-Z's music streaming service Tidal. It would be part of the Square's push to diversify. Square CEO Jack Dorsey has discussed a potential deal with Jay-Z, the rapper and music mogul. The talks may not result in a transaction. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Don't know if it's here. We're looking, we're doing surveillance, sequencing to see if it's here. But I had said, and I still feel that way, I would not be surprised, given the prevalence of this in the UK, that we already have cases here at a low level that we haven't detected yet.
Dr. Fauci, with an incredibly important moment with David Weston yesterday, I really can't convey the importance of about a 2-minute stretch in that conversation where Dr. Fauci says, get up the courage, get out there and get vaccinated. We have taken pride in our coverage of this pandemic, starting in February and March, really with the leadership of the United Kingdom medical community over to Johns Hopkins. And part of that discussion has been Albert Coe of Yale University. He is expert in the diseases across this world that involve bacteria and virology. He's also expert in understanding the need for vaccine. He will have the courage to be vaccinated, I believe, on Monday. Albert Coe, you know that Yale University, ages ago, beginning in 1897 and on to 1925, invented the syringe with the Becton and Dickinson Company. We take it for granted today. Tell us the medical evolution of getting that shot and why we should not be afraid today.
Right, Tom. Well, thank you very much for having me back on. It's always a pleasure. So with respect to the medical evolution, you know, we have 100 years or more of experience with vaccines. And if we think of one medical success story that really changed our lives, it's been vaccination in terms of prolonging life expectancy, decreasing childhood mortality. And now we come to COVID. And, you know, with the amazing work that has been done, the progress in less than a year, we have a vaccine where, you know, current clinical trials have, you know, exhaustive studies have shown that it's a safe and effective vaccine. And I think that's a message that we really need to get out to everyone. It's on everyone's mind, whether, you know, we're in a pandemic, this has been developed quickly, is the vaccine safe and effective? And all the evidence we have, you know, points to really another major medical success story in the making.
What is the most efficacious way to line up the ducks to get this done? How do we get millions of people most efficiently to get the vaccine?
Yeah, so the first step, you know, which was, you know, a tremendous amount of work, was to do all the research and development to get a vaccine. The hard work is now coming on. We have to now get, you know, tranches or swaths of populations vaccinated. And I think there's a couple of issues that are really important to emphasize. The first is that we have to certainly protect our healthcare workers, our essential workers, those at most risk for the disease. We have to take care of the population here in the United States, and we're going to have to vaccinate up to 80% or more of the population so we can get back to normal or some semblance of normality. But the biggest issue is that we're going to have to protect the whole world. This is not just an American problem. This is not just a European problem. This is a problem that's affecting the livelihoods of all people in the world. That's 7.8 billion people. And we're going to have to think about the long run and how we're going to protect those populations across the world.
In the medium run, as we unroll the vaccine into the general population, people keep getting the virus. We now have a total death count in excess of 320,000 in the United States. We have a case count that is climbing every single day. And there is a question of what we can do to prevent death. How good have some of the remedies been, has the therapeutics been to deal with the virus once people get it and get very sick from it?
So I think, you know, Lisa, really the important issue is that we're going to have to use, you know, what we know is tried and true and works for the public health prevention in order to get ourselves into that phase where the vaccine starts kicking in and decreases transmission. We do have improved. We've learned a lot in the last year about how to treat patients We have, therapies and modalities such as steroids, which decrease the risk of mortality. These reduce the risk of mortality 20, 30%. So we don't have any game changers or home runs on the forefront of therapeutics at this point. And so we're going to have to rely on public health, sound public health prevention to get over this period. And this is going to be a difficult next several months during these winter months as the surge is occurring, not only, across the United States, but in many parts of the world.
Can we get to herd immunity if we can't get kids vaccinated? Because from my understanding, they won't be able to get vaccinated likely until potentially late next year at the outset, based on the studies currently out there.
Yeah, so as you know, since the beginning, there's been debate about herd immunity and whether natural infection, and we can get, enough people, infected that they become immune due to natural infection, and that would protect the rest of the population. I worked in Brazil for 25 years. One of the cities in Brazil, the city of Manaus, which is hit the hardest, had an epidemic that affected 75% of the population. So if we're thinking about herd immunity, those are the levels of people who are going to be infected to reach herd immunity, and that's a disaster that we just can't accept. That also provides us a benchmark of how many people we need to vaccinate. We're going to have to vaccinate over 75%. That's my own judgment at this moment. And we're learning more. We have to be humble, and we're learning more each time. But we're going to have to vaccinate large numbers of our population to get to that magic herd immunity threshold.
Dr. Ko, thank you so much for being with us. Best of luck when you go get your vaccine. Are you worried, or are you excited for it?
No, I'm not worried, and I'm excited. And I think we're really, entering a new phase of how we're going to be able to deal with this vaccine. And I'm just proud to be part of that.
Albert Ko, thank you so much. Greatly, greatly appreciate it, with Yale School of Medicine. Lisa, I've had a lot of people ask me when I'm getting vaccinated. My answer is simple. The old people really need to be taken care of. And then, as Dr. Ko mentioned, these essential workers are absolutely critical. I was outside Mount Sinai yesterday, and you know what, Lisa? There weren't 5 or 6 ambulances lined up, but there were 4, and that's 4 too many.
Well, and that's why therapeutics comes into play here. What's the death rate? How can we bring down and mitigate some of those side effects? And as Dr. Yu was saying, as Dr. Ko is saying, we weren't necessarily getting that big of a reduction in the death rate as we would hope. 20 to 30% doesn't get it done.
Well, we're just to the first million in the United States, and we got many, many more. And then, I think of what Bill Gates has done with Melinda Gates about the eradication of polio and other diseases across the world. Then it becomes a worldwide issue.
Tom, can I just emphasize something Dr. Ko said? He said to get to herd immunity, we would have to vaccinate in excess of 75% of the population. That is higher than other estimates. And that is a pretty stark number given where we are in terms of deliveries of the vaccine. Yeah, I agree with you. And that marginal difference from, say, 60% in the zeitgeist out to where Dr. Ko is a huge, difference. Leap. And, you wonder what institutions will do here in the coming months as well on, can you show up for work not vaccinated? Can you get on a plane not vaccinated? And the rest. This is a trade up 6, Dow futures up 43. On the markets to synthesize it and piece it together, Santa's delivered Jeff for you. This is Bloomberg on radio, on TV. Good morning.
debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
How have you changed as a leader since that day in 1993 when you joined Roche?
You develop over time, and it's a series of experiences which hopefully make you a better leader.
Checks are the most efficient way to provide support for the economy right now.
We still have momentum, but we are losing momentum at a critical time.
We're looking for a reboot and a restart and a recover, and I think that's really the theme for next year.
The biggest stimulus that's going to come is the vaccine.
Once the vaccine arrives, put on your seatbelt. I think this economy could really rip.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning. This is Bloomberg Surveillance on television and radio. 'Twas the night before Christmas or the day. Tom trying to decide which martini glass to hang on the tree, which he's still trying to get fully decorated. John Farrow orchestrating a Brexit agreement over in London. He cannot make it here today because he is hard at work at that. And I hear
I think he's knee deep in the Brexit negotiations myself.
Yeah, and you're really weighing in on the fish. Yeah. Which fishing rights are you looking for, Tom Keene?
Well, it's been Christmas Eve, and folks, this is serious. We've gone back and forth all morning on press conference watch. Lawrence the cat over at 10 Downing Street went out and tackled a pigeon at one point. Right now, nothing's being tackled. There's been a delay.
John Farrow,
I think I'm losing track of time an hour ago, maybe an hour and 2 minutes ago. It just simply came out. They're not ready. We are on watch on this Christmas Eve for a momentous announcement by the Prime Minister, by Dr. van der Leyen, but we are not there right now. Lisa, you see it in sterling, 136 level, up we go, and now recovering and testing new weakness.
People are benumbed, though. Let's be honest. I mean, this movement isn't dramatic, and I think there is a level of exhaustion after a 2020 that has been Eventful, Tom. I think that's a good way of putting it.
Well, help me out with a data check, Lisa.
All
We
right,
welcome all of you on Bloomberg Radio and Bloomberg Television with early closing. What is it, Lisa? It's like, I mean, why do we open on Christmas Eve? We're closing like at 1 p.m., right?
Let's just make the whole show about everyone should just take off. I mean, they're taking off anyway because you're not seeing much action in the market. The S&P future is pointing to 36.86. We're up basically a little less than 0.2%. And you're getting a little bit of dollar weakness, but basically flat in euro dollar. 10-year yields basically flat. Everything flat.
Yeah, flat. Well, again, sterling moving 135.81. We're watching it tick by futures up 5, Dow futures up 36. The real headline of the last week, besides Faro day trading DoorDash, has been 31 on the VIX down to 22.67. So we've struggled through the data check. I don't know, Lisa, what else do you want to add? How about
Washington? I think there is
Washington?
one thing that stands out to me, and that is real yields. And I'm surprised. I'm stealing a page from your book, Tom. But basically, the inflation-adjusted yield on 10-year notes in the United States falling to the lowest since early September of negative 1.05%, Tom. This getting my attention and really fueling a lot of the risk appetite that we keep hearing about.
And what is so, and we'll get to Jeff Yu on this in a moment, but what's so important, folks, is not the certitude now, but the certitude structured by strategists and thinkers out into 2021. And one of those, of course, is that real yields just couldn't possibly go lower. That would just never, ever happen. I do want to say good morning to all of you again on this Christmas Eve. A joyous day for our team as we will wander out. I believe, Lisa, no one on our team is working tomorrow. I'll be in early to get the day going.
To get away from the tree that's still not up.
Full team coverage. No, we got the ornaments on the tree. I did get the, Pharaoh was on me about, Tom, you just can't put a green tree up. You got to put something on it.
Well, are you actually going to be here tomorrow?
Yeah, I'm coming in tomorrow. We're doing a broadcast. I'm told that, we're Christmas Day.
Are you going to wear a Santa hat?
No, I did that a few years ago. That didn't go over well.
All right, good to know.
Let us get here to an important conversation. Jeffrey Yu synthesizes what we see in economics and markets in a wonderful and delicate way. He's with BNY Mellon. To say he's our senior strategist doesn't give justice to what he grasped here of the dynamics as well. Jeffrey, you are ensconced in Tier 4, Tier 5, Tier 6, somewhere in the vicinity of the microcosm of trucks stacked up in southern England as well. Sometimes our macroeconomics are overcome by micro events. Tell us about the micro event of business investment and animal spirit into next year.
Next year, in one word, vaccinations. If that works, if the Biden administration can bring through 100 million doses in 100 days or outperform that, we've had Tony Blair talking about giving additional dosage already to speed up the process. If that works, animal spirits are going to let rip. I've heard people talk akin to the roaring 20s again. Are we going to have the roaring 2020s? So that's what people are hoping for. But so far, government competence globally, I think still caution is needed.
Jeff, you were weaned on the LSE, the history, the linkage of history into all of this from Lionel Robbins and, of course, the great Meghdon Desai, among others as well. Within this historical moment and all that we babble about each and every day, do you have an optimism that we get back to normality after the vaccine? Is it not V-shaped, but is it literally stochastic where we explode back to a normal economy?
It will be V-shaped for some. It may not be V-shaped for others. And that, again, is going to be the policy challenge for some time. Remember, a few months ago when we first talked about this, there will be winners and losers out of the recovery. And then governments will need to grapple with how do you ensure that the distribution is not too much concentrated within those who've done relatively okay out of the lockdown, out of social disruption already. Otherwise, you're going to brew social issues. But I think we're seeing that UK. So Is it going to be V for some? Is society going to be a K? Or is it going to be an L for others, or even worse? I think that's going to be much more important than what the broader GDP number is going to be.
Jeff, a lot of people say that these fundamental arguments don't really matter for risk appetite, that the animal spirits will prevail regardless because you're getting penalized for putting your money in cash. The negative real yields that keep getting negative-er globally, and particularly in the United States. But there are two components here, right? There's the actual yield, and then there are inflation expectations. Do you think that the inflation expectations have gotten ahead of themselves and that the actual nominal yield is what's telling the right story, and that's one of slow growth and more moderate expectations ahead?
I think the pace has caught many by surprise, I would say, including myself. If you look at the five-year forward break-even right now, it's getting back to 2%. You know, we haven't been here since July last year when we were thinking about additional Fed easing. But in terms of levels, then from central banks' point of view, we're nowhere near where the central banks want it to be. They want the economies to run hot, be it the ECB, be it the Fed. They want to see yields go through 220, 225. Those were the highs in 2017, 2018. So what are you looking for as a central banker right now? Pace or levels? I think they're going to go for levels, which means you keep things easy, and that's going to help risk appetite.
So how low could negative yields get?
Well, if we do get to 220, 225, and the 10-year stays at 100 basis points, then if you just use that, then we're looking at well below 100 basis points in terms of negative yields. And again, that's something that central bankers, they want to enforce them right now. In their view, this is the only way to lift animal spirits, to get investment back into the economy, to move all that cash. US, British savings rates above Germany's. Think about that. It needs to be spent.
Extraordinary. Jeff, you have very good insight. Jeff, you mentioned pace and levels, and mathematically, folks, this is so important. When do you presume, given vaccination, that we get to the glide path of January and February of this year? When do we see a level jump that gets us back on stream that seemed comfortable for so many of the public?
I think it would be around mid-year, and I might venture to say probably right after mid-year rather than right before. So I'm going to borrow from the ECB here. They've already shifted their language. They had a vaccine being available mid-year 2021, and then distribution towards the end of 2021. That has entirely been shifted forward by 6 months. So that's good. That's why we've seen such a strong move since November. But the next phase is the normalization phase. Then it's going to be on individual governments, and then you're going to start to see dispersion. French authorities just approved vaccinations today. So it'll be different in different places.
But do we have the political economic architecture to begin to reverse policies in these dire times? Do we have the ability to reverse and in some way get our policies back to normal?
Short answer is no. Central banks certainly are not going to do that. Again, let's borrow from the RBA and the ECB. They've given you their time phrase. Yield curve control in Australia, 3 years. That's your policy timeline. No normalization for 3 years. And then from the ECB's point of view, investment plan, fiscal boost for the next 2 years. That's the political will. So for the next 2 to 3 years, I think we're looking at the status quo in terms of policy. That's good for risk appetite.
Well, Jeffrey, you thank you so much. And for all of us at Bloomberg Surveillance, including John Falero. Including John Falero, Jeffrey Yu, thank you so much with BNY Mellon for just great conversation through the year, perspective and wisdom as well.
We have a surveillance correction.
We do?
Yeah, we do. Al from New Jersey messages in, Tom, to tell me to remind you that you haven't worked a holiday in over a decade, and that you're not working tomorrow.
It has been, I didn't know that. Thank you. That's good. That's good to know.
We can do our scheduling on air today.
But the attempt was made for me to work on holiday as well.
So
we have a thing here, folks, called Tea Days, which has something to do with how Farrell gets off 8 weeks of vacation a year. Lisa and I would know what a tea day was if it hit us. Maybe there'll be one under the tree.
I will say you now have time to perfect your pineapple-based ham, which I hear is coming along just swimmingly.
We are all over this. I'd like to, Vet Bill got the turkey out in Central Park. We really lucked out on that. I had to pay for the ham, actually, full disclosure.
Oh, he couldn't take down?
Yeah,
take down a
the basic
pig in
idea
Central
is I
Park.
got some hoity-toity recipe, and I was told if I didn't pin pineapple strips to it, I shouldn't even come home.
Right. So have you found those pineapples yet?
No, we're in search of pineapples. That happens after the show. The entourage is out. They spread out across Manhattan looking for pineapple slices.
All right. Good to know. So we'll know what to look
They're
for
out
today
there
in New York
somewhere.
City.
Let's look at pineapple futures right now.
Please.
Right next to sterling futures, 135.81 on sterling. That is a waiting for Brexit announcement sterling. Pineapple futures 142.33 from New York on radio and television. This is Bloomberg. Tom Secunda just called and said, "What's that symbol?"
With the First Word News, I'm Rishka Gupta. President Trump has pardoned his 2016 campaign manager, Paul Manafort. Manafort had been convicted of financial crimes and illegal lobbying. The president also pardoned political advisor Roger Stone. He had already commuted Stone's sentence for lying to Congress. Also pardoned the father of the president's son-in-law, Jared Kushner. Charles Kushner was convicted of crimes that included witness retaliation. House Speaker Nancy Pelosi is hoping to seek unanimous consent to increase those individual payments in the stimulus bill as President Trump demands. But House Republicans are likely to block the attempt. That's according to a person who was on a call with GOP lawmakers. If the attempt is stopped, Democrats will introduce a new bill next week that would raise the payments from $600 to $2,000. And a historic post-Brexit trade deal is being held up by last-minute haggling over fishing rights. UK and European Union officials worked through the night to try to get the agreement finished, but now a press conference with Prime Minister Boris Johnson has been cancelled, and it's not clear how long it will take for the talks to conclude. There's a new study about the mutated coronavirus strain that's been spreading in the UK. It says the virus appears to be more contagious and will likely lead to more hospitalizations and deaths next year. The variant is said to be 56% more transmissible than other strains. China is targeting billionaire Jack Ma's Alibaba empire in a monopoly investigation. At the same time, regulators have summoned Alibaba's affiliate, Ant Financial, to a high-level meeting over financial regulations. The pressure is on Ma is part of a broader effort to rein in the increasingly powerful internet sector. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
It's very important to point out there's not the state and local spending that we need, the transfers to the states, and that means as we unleash pent-up demand, we're not going to really be able to fully recoup all the employment losses we lost because state and local governments will still be cutting.
That was a blistering interview with Diane Swonk of Grant Thornton. She did not mince words over the non-politics of this moment, that we've got to get to it and get to it fast and then sort it out later. That was a clear message from Diane Swonk. We're always scrupulous about doing surveillance corrections. And Lisa, I misspoke. Bloomberg with all-encompassing pineapple prices for the Christmas ham. And we thank Tom Secunda and all of Bloomberg for helping out with Mexico Veracruz medium pineapple prices coming in at a 12 spot, 12.00 per case.
Down.
Good to see that on the Bloomberg.
It's down. I will say, though, I actually did do my own search on the Bloomberg, and there actually are futures, but only for pineapple pieces, which might be in your future, Tom, which actually, frankly, might be more your speed this time around.
Pineapple pieces do not come home. We need slices on the Christmas piece. So we thank Tom Secunda and all of Bloomberg LP for giving us the commodity prices we need to know. Right now, we need to know from one Terrence Haynes of Pangea Policy what we're going to do in Washington. We've been talking about a numbness, about staggering from issue to issue. Terry Haynes, you have a great optimism that politics will sort out on Capitol Hill. What does our politics look like in February of next year?
Good morning, Tom and Lisa, and I've already seen the headline this morning on pineapple futures, keen moving the markets.
Thank you.
What it looks like in February is even more factionalized than it is today. I strongly urge people to stop thinking about political parties and start thinking about political factions. Left to right, you have progressive Democrats, centrist Republicans, conservative Republicans, sort of swirling coalitions. The centrists have prevailed on spending, as they tend to do, for example. And you're also going to have a president, I think, that, and no disrespect at all, that has very little ability to have a honeymoon. Even he says he won't have one. And really doesn't have the ability to lead his party. So it's going to be a very, very difficult slog.
Long ago and far away, you learned at Oberlin, as I learned as well, that the moment a president walks out the door, they're basically ancient history. For the shades of Republicans, will President Trump be ancient history?
I think by and large, yes. Post-presidential half-lives, post-political half-lives are much shorter than most politicians think, and then they experience it, and the reality is quite different. I think that what you're going to have is a post-Trump political party. There will still be some Trump acolytes, but those people are going to be looking at trying to figure out how to move policy and how to move politics in a post-Trump world. I think that the president's going to be kept quite busy, at least in New York, with investigations and the like. And I think that what ends up happening is that the supporters of existing politicians, once they move on, tend to look for ways to affect the existing political scenarios, not ones in the past, and not trying to resurrect them.
Terry, I love looking for your notes after we get some sort of move in Washington about how this increases or decreases the probability that we will actually get something passed with respect to fiscal support. You thought that the latest move from the president did reduce the chances, but I believe, if I'm getting it right, to 80%, not that significantly, with still the majority view here that we're going to get something through and that Congress will override any potential veto by President Trump. Is that the path of events as you see most likely, or do you think that President Trump will kind of bow out and not necessarily take action?
I think this. I did go back down from a near certainty to 80%. I mean, I think it's because I think Trump introduces a non-trivial risk. There is, the way I would put it is, there's not a stimulus or government spending crisis yet, but it is by no means certain that just because Trump blusters that the worst is going to happen. He's backed down and modified his views on spending crises before. I can see ways for him to make his points and still not veto the bill and not introduce chaos. I also see a political case. I see no policy case for him doing what he's doing, and that's different than usual. I do see a political case for him sowing the maximum amount of chaos possible. So, I urge markets to look very closely at this, because, as I say, even going down to 80% is a non-trivial risk when you consider that the Congress has actually passed these bills already. So we're in for the next few days. That is, I think, that is far more uncertain than it usually is in these matters.
What's the political case to sow chaos?
Bunch of different things, and I'm not touting any of these. I'm just listing them. First of all, you differentiate your brand, the Trump brand, versus the swamp. I mean, you see that already. You stoke Republican turnout in Georgia. You fire the people up that you need in order to counteract very organized Democratic efforts to elect 2 senators. You make the point that the Democrats are more interested in helping foreign governments than helping people, and that's because of the mashup of the full-year spending bills with the COVID bill. There's a possibility that a lot of this is a smokescreen for the pardons. Many of them are controversial. And more broadly, you further distrust of the media and government. And one lesson I think we've learned from the Trump years is that the shriller and more extreme the Trump opposition gets, the more power he gets. So he may well see an advantage in that.
Terry Haynes, very quickly here. Michael Scher, I thought, with a very smart article in the Washington Post on Democrats in panic over 22 and 24. Should they be in a panic, ex-Biden?
I think they should be very concerned. Anytime that, well, firstly, they've lost seats in the House. They couldn't get over the hump in the Senate. And the reason why Biden is president is largely because next year is largely because Trump is president this year. So that is not a rosy scenario for them. It's hard for them to make the case that they're rising. It's also hard to make the case that they're falling off. I mean, what we're in right now, I think, is a period of very close partisanship, like it was about 100 years ago.
Yeah. Terry, thank you so much. Terry Haynes, Pangea Policy, just helping us out so much this year as well. Lisa, what do you see?
Tom, you're looking at 2024 already? Seriously? We got to get out of 2020.
Oh, come on. Wednesday of November, they were looking at 22 on the way to 24. I'll tell you, the senator from Kentucky is looking at 2022 after Georgia.
Yeah, well, I'm looking at June, July, August when we get vaccinated.
I thought you meant June, July futures in pineapples. 135.71 on sterling, sort of unshare. We're watching the headlines out of the United Kingdom to see if we will get a Brexit deal on this Christmas Eve. Coming up, John Riding, Breen Capital. This is Bloomberg. Good morning.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg Radio, Bloomberg Television, thank you for being with us on this Christmas Eve. Lisa Abramowitz and Tom Keene. John Four is in Tier 7 lockdown somewhere, helping to wrap up Brexit, 135.76 on pound. We'll get to the esteemed John Writing in a moment. Right now, for radio, it is the images we all know. Maybe less bustling is typical on a Christmas Eve, but it is O'Hare of Chicago with more than a busy terminal. This is the United Terminal at O'Hare. Lisa, the medical professionals we've talked about, they get emotional.
Yeah, this is a pivotal moment. It's heading into the riskiest season at a time when we do have hope, but we're not there yet, and people have to still be careful.
Still masked at O'Hare, no doubt everyone masked at O'Hare, but nevertheless part of the tension of this Christmas holiday 2020 and into 2001. Right now, my most painful interview of the year, which always will need a description on Bloomberg Radio.
Yes,
John Writing is really one of our first and strongest supporters of Bloomberg on the economy and Bloomberg surveillance. And I can only say that Mr. Writing wore this getup once at a Bear Stearns party, and Ace Greenberg threw him out of the room long ago and far away. For those of you fortunate on radio, he is decked in Santa Claus regalia in an LFC Liverpool Football Club sweater, just to let me know that the Tots took down the big defeat the other day. John, the Premier League is one of the few things that seem to have run correctly in this miserable 2020. How did the Premier League do it, and Championship League like Preston North End and that do it, and so many others in sports failed?
It's not entirely clear, but they had a comeback plan. They had bubbles, they had frequent testing, there have been issues. And apart from one or two games, there have been no crowds. Unfortunately, they're able to continue, even though the entire country seems to be heading towards Tier 4 lockdown. These sports won't be locked down, so at least we'll have something to watch on Boxing Day, which is a huge soccer fixture day in the UK.
John,
I
make jokes here, but there's a huge mystery to the underlying theories that have gone out the window into the mechanics of coming out of this crisis. If we get a vaccination, do you see normative, traditional macroeconomics out of this crisis, or will it be something different?
Well, we do have 2 vaccines, and hopefully all 3 of us will get those vaccinations soon, and then we won't have to be remote. And at that point, when enough people, I mean, the term's herd immunity, and it's going to be vaccines into at least 70% of the arms of people in the country, then those parts of the country, those parts of the economy, in leisure and hospitality, where we've got some 4 million job losses since February. When that business can come back, we can start to think of a more normal economy. The question is, how many of those businesses will remain? And so it's very important what is going on with this bizarre situation over the fiscal support package. And there is a certain person who has to decide, does he want to play the Grinch or does he want to play Santa? If we do not get that fiscal support package, which has $280 billion in for supporting small businesses, there's going to be far fewer businesses around come June, July, August, when the economy should be able to get back to a more normal footing. So what happens now is very important in answering your question. And honestly, I have to think, like the Brexit deal today, that the theme is we've got to go to the 11th minute of the 11th hour. Well, it's not the 11th month; it's the 12th month now. But you get the point there.
Yeah. Well, then there's a question also of what the longer-term damage is, because what you're saying is somewhat contrarian. A lot of people have been shrugging off a lot of the recent weakening data, shrugging off the prospects of a prolonged deal that perhaps doesn't get struck before the money runs out on the 26th. And you're saying it does matter. At what point should people take stock and start to downgrade their expectations for next year based on some of the weakness that we're seeing now?
At the point we don't get a deal. If we get to that point, you need to downgrade expectations for the first half of next year, because next year is going to be a year of two halves, just like any good soccer match. And the first half of the year is going to be one where we're still struggling with the virus. We all know the infections data. We unfortunately all know the death toll from this virus. And we need to protect ourselves to the point where that vaccine is widely available. And what was key, and we can look back in April and May timeframe, what was key was the income support that the government provided. But employment needs employers, and businesses will, a lot of small businesses will struggle. You know, it's great. We can look at the stock market. We can see the S&P 500 economy. That looks a pretty good economy. But more than half of people in employment are employed by small businesses that aren't listed on the stock market, that are struggling, that don't have the same access to capital markets. And that's why a renewal of the PPP program and other support for businesses is just absolutely vital to make sure that those employers are there for when employment can return for that sector of the economy.
All right, John, since you're making a lot of football metaphors here, and you really do want to rub the victories of Liverpool in Tom Keane's face as much as possible, the two halves of the year, sort of like a football game. So let's make an additional sort of two halves analogy here, where you've got a binary outcome. Either Liverpool wins the title or it doesn't, depending on what happens during the weeks ahead with inflation. Does that work at all, Tom?
I don't know. I'll see. All I know is Spurs revenge, 28 January 2021.
Well,
That's the schedule.
We'll get there. We'll get there. But in terms of inflation, I mean, a lot of people are saying that it's going to remain muted next year. What's the sort of binary event that could cause the difference there?
Well, I don't think inflation will remain muted in the sense that it will remain below the Fed's inflation target. Now, I fully recognize, including yesterday's report, the last couple of data points on consumer price inflation have been very good from the perspective of the consumer. They've been unchanged, and unchanged prices are good. Contrary to what the Fed thinks, that it needs inflation to stimulate the economy, it doesn't. Low inflation enhances people's purchasing power. But the growth rate of money that's coming from the Fed's continued purchases of $120 billion of securities per month is boosting the money supply at a relatively unprecedented rate. And the question is, does that money have velocity? Now, back in 2008, 2009, the fiscal deficits and the QE were largely fiscal transfers between corporate America, financial America, and the government. This is, to some considerable degree, a transfer between the government and households. When households spend those accumulated savings, and hopefully the next round of fiscal support that hopefully will be passed, will be signed in the next few days, hopefully, that to a large degree is going to be financed by the Fed printing money. And I think that that will push inflation higher. We already see it in the commodities markets. We see it in prices paid. We see it in the small business surveys. We have yet to see That's at the end of the inflation chain. So I think that 2021 will see an above 2% inflation rate.
John, you've been such a clear voice on Brexit over the, as Lisa mentioned earlier, folks, 5 years. Maybe we get an agreement today, maybe we don't. What does your United Kingdom look like after Brexit? 1 year out, 2 years out? Obviously, the Prime Minister wants Pax Britannica, but what will it look like?
Well, again, in the short run, the question is, what's it going to look like in the next few weeks? I was watching your show earlier. You mentioned Tesco. Let me give a shout out to them. They've done a fantastic job pivoting in this economy, getting my mother, Merry Christmas, Mum, her groceries once every 3 weeks. They've done a tremendous job. But if we have those long lines of lorries, trucks as you call them, at Dover going out and at Calais coming in, we are going to have panic buying, and we're going to have shortages. That's in the short run. In the longer term, there simply has to be a deal. The UK is too important a trading market for the export-oriented economies of the EU not to have a trade deal with. So I think that happens. But what happens in the short term is much more concerning to me if we don't get this deal. Now, you guys reported this morning. Well, here we are. It's like earlier in the week with the stimulus deal. We have a deal. Maybe we don't have a deal. Now we're debating over different types of fish. It's like fish and chips and a trade deal today.
Well, maybe fish and chips at Harrods. John Riding, thank you so much for your support. And also, Lisa just noted there's a job opening 2001 Christmas at Harrods for Santa. I'd show up. Maybe don't show up in that Liverpool sweater as well. John Riding of Breen Capital, who over the years has been just wonderful in giving us perspective on this strange economy. Coming up here with futures up 6, Dow futures up 37. The only one on the planet who has not begun their Christmas shopping.
Yeah, who's that?
Except me, one B. Ritholtz, Bloomberg opinion columnist Barry Ritholtz, will join us to give perspective on successful investing in 2021.
Wait, hold on a second. You didn't successfully do the shopping that you said you were going to be doing?
No, we're breaking it in. Come on, you get out, you go out, wander over, get a small trinket here, a small trinket there. You're done shopping by 2 p.m.
Fair enough. Well, honestly, I mean, you always do a good job.
We will see. Sterling, we're watching 135.79. Stay with us. This is Bloomberg.
With the First Word News, I'm Mariska Gupta. Republicans are likely to block House Speaker Nancy Pelosi's bid for $2,000 relief checks. That's according to a person who took part in a phone call for Republican House members. Pelosi took up President Trump's demand for larger payments to individuals in the Coronavirus Relief Act that Congress passed. She wants to seek unanimous consent to increase the payments, but all it takes is one lawmaker to stop that. President Trump has vetoed the $740 billion U.S. defense policy bill. That set off a battle with Congress that could result in his first override by lawmakers. The president called the measure a gift to China and Russia. He wanted to attach to the defense bill an unrelated provision to eliminate the law that protects tech companies from liability for most content published by users. The U.S. now leads the world when it comes to the number of people receiving the coronavirus vaccine. More than 1.1 million doses have been given in the first 10 days the shot was available. 3 states have vaccinated more than 1% of their populations: North Dakota, West Virginia, and Alaska. Global M&A activity came roaring back in the second half of the year after being at a near-decade low. Deal volumes are now down about 6% from the year to $3.5 trillion. Still, about 2/3 of those deals were signed since July. And China is targeting billionaire Jack Ma's Alibaba empire in a monopoly investigation. At the same time, regulators have summoned Alibaba's affiliate, Ant Financial, to a high-level meeting over financial regulations. The pressure on Ma is part of a broader effort to rein in increasingly powerful internet sector. And Bloomberg's learned that digital payment company Square has held talks about buying Jay-Z's music streaming service Tidal. It would be part of Square's push to diversify. Square CEO Jack Dorsey has discussed a potential deal with rapper Jay-Z and music mogul. The talks may not result in a transaction. And there's a new study about the mutated coronavirus strain that's been spreading in the UK. It says the virus appears to be more contagious and will likely lead to more hospitalizations and deaths next year. The variant is said to be 56% more transmissible than other strains. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
For a reboot and a restart and a recover. And I think that's really the theme for next year, as is pent-up demand, because as you know, there's $1.4 trillion of extra savings in U.S. households. And so that is going to be spent.
The clear message that we've got right now, Alicia Levine, BNY Mellon, we've heard it from others today, get through the vaccine, get up to the right percentage amount, and onward and forward. Futures up 5, Dow futures up 34. Lisa, as you set up with the open right now, we still are watching sterling in the late afternoon in London. Will we get news?
Yeah, and will it be enough to actually move markets and to change this sort of benumbed feeling that we all have to the policy turmoil around the world of 2020? Coming up, we're going to be speaking with Victoria Fernandez on the open, one of John Farrow's properties. Victoria is with Crossmark Global Investments Chief Market Strategist. But really, that to me is a question. People have gotten sick of these deadlines that come and go. John Farrow's made a big point about it. He's not wrong. We're still talking about fisheries. It's not over yet, Tom. We'll talk about that.
Very good. We do have headlines out moments ago on Brexit. Help me out here, Natalie, if you can. United Kingdom and the EU to keep existing data rules over 6 months. That sounds like an agreement, but with a punt down the road to over 6 months, whatever that means. It contains a deal to keep the data flowing, maybe to build up some trust there as well. And again, it is a bridge to data accord. Sterling bridges up with a little bit of activity on the Bloomberg terminal, 135.82. This is just breaking right now, so we'll see how sterling does as we speak to Barry Ritholtz. There are any number of things to do within the holiday season, and one of the special occurrences at Bloomberg Surveillance on radio, on television, is to tell people on radio how fortunate they are to not see John Riding's Liverpool Football Club sweater and then right on to the drama of Snoopy and the Christmas sweater of one B. Ritholtz. Barry, you are in the season. What have you learned about shopping this year? In this fourth quarter economy, it looks a little bit grim right now, doesn't it?
Yes and no. I mean, we've talked about the K-shaped recovery and how parts of the economy are doing great and other parts are not doing well. Clearly, we're seeing a lot of people shop online. It's not just Amazon, but it's everything from Shopify to Etsy to work your way down. Even eBay, if I can reach back into history, is seeing more action. So you don't have to go to the mall. If you've waited till now, well, it's probably a little too late to go shopping online. But we are accelerating the future. If we've learned anything from the 2020 pandemic, it's that the future might come sooner than we think. And clearly, we drew a lot of stuff forward from 5 years forward.
As people say to me sometimes, why is B. Ritholtz on? I mean, he writes brilliant, columns. He's got the brilliant podcast. What's this about? What it's about, folks, is Barry truly is one of the most read-in guys I know, not only on the zeitgeist in the moment, but Barry Ritholtz can take it back decades with authority. Barry, I saw the headline today that matters. Fidelity calculates $240 gajillion they've had to make up to money fund investors to pay their yield after the fees. The fees are microscopic. The money market fund yield is even more microscopic. That can't go on, can it?
Yeah, I have to tell you, it's more of an accommodation to large clients than it is anything. Look, cash is cash. It doesn't pay anything. It loses value relative to inflation. And so to expect anything significant other than what the 3-month T-bill is yielding it is really, silly. And yet a lot of these big firms, and there's a split between those who are guaranteeing we won't break the buck and guaranteeing a certain amount of yield, and those who basically say we're going to let the market do what the market's going to do. It's not up to us, say a Vanguard or a BlackRock, to make up any shortfall. We're not guaranteeing you a return on Tom's triple levered cash funds. Zero is going to be zero.
Yes, it is. I've noticed that. Thank you, Barry, for reminding me of that. Bank of America Securities out with an important essay on active passive, where maybe active had not so much a good year, but a less worse year than before. Barry Ritholtz, an update on the dominance of passive flows.
So, everybody kind of loses context about this. Yeah, about 50-something, 52, 53% of ETFs are passive. But when you look at how money is managed around the world, stocks, bonds, commodities, real estate, passive is really a very, very small percentage of it. All the excitement is in the stock picking and in active equity, So when that massive mind share has slipped as passive has gained a lot of traction over the past, really since the financial crisis, it's exploded. There's the general sense that it's just easier to throw money into a passive index and forget about it. S&P has a really interesting note out earlier this month looking at passive and active. And
What'd they say?
Well, they basically said that when we see successful active managers, about 2/3 of their success is luck. And they do this by tracking persistency over time. Anyone could have a good month, quarter, year, but can you do it year after year after year? Turns out about 36% of active managers who have been successful are demonstrating persistent skill. Not 36% of all managers, 36% of those who outperform in any given year. It's an amazing statistic. We love, as investors, we love the thrill of the chase. We have a tendency to underperform our own investments because we pile into these hot stocks, funds, and ETFs after they've already had their run. And that creates a giant behavior gap. If you're going to underperform your own holdings, it means you're buying high and selling low.
Yeah, my timeline on this with research folks, particularly out of Vanderbilt and UMass Amherst, is about 3 years out is where the mortality clicks in of active managers. It's really difficult out 3 years. Very quickly, Barry, get the crystal ball out for 2021. What is the Ritholtz surprise for next year?
That's an interesting question. I thought I was in the minority a few months ago when I was saying I think the recovery is going to be faster and more robust than a lot of people believe. I think there's a little PTSD from the slow recovery from the great financial crisis. I think the rest of Wall Street is starting to move towards that position that the recovery will be quicker than people suspect. So I don't know how much of a surprise that is. If you want my best surprise, it's that the variety of COVID vaccines are eventually going to lead to the demise of the anti-vaxxers. When people figure out, that this is great, this is a fantastic use of human ingenuity to prevent deaths and hospitalizations, I think we're beginning to see the end of the anti-vaxxer movement.
Got to leave it there. Run out of time. Barry Ritholtz, thank you so much. A great holiday to you. I can't say enough, folks, about his podcast, which has been industry leading as well. Coming up tonight on Bloomberg Television, a special report on this American economy, this unequal recovery. Look for that. And we say all to you from Team Surveillance, may you have a wonderful holiday season and a better than good Christmas. This is Bloomberg. Good morning.
新型にはなんと2万点以上前進でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から 適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
For our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the Open starts right now. We begin with the big issue, Washington running down the clock. President Trump dampening the prospects for additional aid before year-end, pushing for higher stimulus checks, upending a long-sought bipartisan compromise over a $900 billion pandemic relief bill. Democratic leaders seizing the opportunity, urging congressional Republicans to agree with their unanimous consent for $2,000 checks by noon today. The stakes remain really high, with softening data revealing an economy limping into year-end as the virus continues to spread.
I had said, and I still feel that way, I would not be surprised, given the prevalence of this in the UK, that we already have cases here at a low level that we haven't detected yet.
State and local leaders fearing another shutdown could wreak havoc on businesses, with D.C. failing to bridge the gap.
We are not destined for a shutdown. I want to do everything I can to avoid a shutdown. The shutdown does tremendous economic damage and collateral damage to families. We can't survive with these economic shutdowns.
It's been a tough period, and the road ahead is going to be rocky. Bloomberg's chief Washington correspondent Kevin Cirilli joining us now. Kevin, can you give us the latest of where President Trump is on his thinking with respect to that $900 billion bipartisan fiscal support package?
Yes, precisely, Lisa. And in terms of where the timetable is for the $900 billion economic stimulus, it's twofold. The clock is ticking down. The Republicans are saying quietly and increasingly publicly that they are not going to be able to get behind the issue of the $2,000 stimulus checks. And because of that, they feel that they are going to have to run out the clock. Now, Democrats are willing to do so, but what's known in Washington, D.C. as a pro forma session, they only have Monday and Tuesday to get to some type of vote in order to keep the government open. Remember, and this has been lost throughout all of this, the economic stimulus bill is linked to the government funding bill. And so if they don't pass this, then they risk having a partial government shutdown.
What is President Trump's goal?
To get from a policy matter to increase to $2,000 checks per Americans, which would align himself with a wide variety of Americans who support that, including left-leaning progressives like Alexandria Ocasio-Cortez. From a political matter, you have to look at this a couple of days out from the Georgia runoff, where Raphael Warnock and John Ossoff are criticizing Senators Perdue and Loeffler for not working bipartisanly in order to get to a compromise. And from a longer-term matter, the president, no one knows what his calculations are in the next 2 to 4 years. And by doing this, he is proving that he is potentially keeping options open for the longer run.
What do you think the impact will be on the Georgia elections with President Trump coming out against this bipartisan bill?
Two things. First and foremost, it will likely give Senators Loeffler and Perdue a closing argument. But there's something else that's happening here, and that's the backdrop of 2024. And I know we're just nearing the end of a gruesome year, and no one wants to think about the next cycle. But look how Senator Ted Cruz, Marco Rubio, and other potential candidates for 2024 on the Republican side vote on this issue of $2,000 checks that the president has come out in support of. This is a dividing marker line issue that we could be hearing about potentially should the president want to keep his political options open in the long run, or to pass the torch, so to speak, in the Trump world on a very divisive vote that could have repercussions in a primary.
Kevin Cirilli, thank you so much for that. Victoria Fernandez of Crossmark expecting fundamentals to actually matter again as the recovery takes shape, writing, quote, "The greatest market risk is that fundamentals don't hold up as we move into 2021 as the focus moves away from COVID-related headlines." Victoria joining us now. Victoria, this is almost sacrilege in this groupthink that we have right now heading into 2021, that the weakening economic data could potentially really hamper the calls for next year to head into risk and to see that momentum trade gain steam. What exactly are you foreseeing as the biggest risk here?
Well, I think it's, as you mentioned in the quote, if we don't see the economic numbers really come through and support the optimism that's there in the market, then I think we're set up for a pretty big pullback in the equity markets. Now, currently, I don't think people are pricing this in. I mean, you can see in the credit markets and the treasury markets, we haven't had a tremendous amount of movement over the last few days with the new stimulus package out, with talks of the numbers not being as well as they should be, with personal income and personal spending being down. But I think as we go into the first quarter, we are having a weak handoff from quarter 4 into quarter 1. We need earnings to be strong, and different than what we normally see, we're seeing expectations going higher for earnings as we approach that. Normally you see companies start to lower those expectations, and they're actually moving higher, which is good. We see durable goods hanging in there. Manufacturing is still good because inventories are low. So we need to see these numbers continue to do well. The consumer is key to that. And for the consumer, they need that money in their pockets, which all comes back to the stimulus bill.
And it sort of embedded in your comments there is this dynamic between the economy, projections of a much rosier future, and then the projections baked into equity prices, into risk assets, which have been expecting this. Has it gotten ahead of itself, this rally, this expectation for a recovery next year?
I guess it's not ahead of itself, Lisa, if it actually comes to fruition. So everyone's expecting that we're going to get some kind of stimulus package. We assumed we were going to get the $900 billion that is tied to the spending bill that Kevin was just talking about. Now that's a little bit in question, but the markets are looking through this saying, look, we're either going to get the $900 billion or something even greater. And perhaps we don't get it till the new administration comes in 3.5, 4 weeks or so. But at some point that's going to be there. That's going to be support for the consumer. Consumption will continue to do well. So in that point, then I don't think there's too much optimism in the market, and it hasn't gotten ahead of itself. But look, we have seen tremendous movement, especially in some of the growth names in the market, even though we still like that area of the market. And I think you have to be very particular in the names that you're buying right now. Dig into those balance sheets and make sure the valuations are proper.
Since the end of October, I'm just looking at this now, the Russell 2000 of small cap stocks has gained 31%. So talking about how far this has run up. Embedded in your comments there, you're talking about how the actual economic data is going to matter. It could potentially lead to a less robust recovery. Yesterday, we got consumer spending data that actually showed a decline for the first time since April. Do you think that that is more significant, perhaps, than the market paid heed to?
Yeah, I don't think it was surprising, which is maybe why we didn't see as big of a market move as people anticipated. We had already seen retail sales come out. We knew that personal incomes were going to be down as benefits from the previous stimulus packages rolled off. So I don't think it was a surprise that that came down. If we don't see those numbers go back up, That's going to be the surprise. We really need those consumption numbers to be there. Now, we do have savings rates that are more than double the historical average. That's a benefit. And so we have some capacity there. And revolving credit, the capacity for revolving credit is the largest it's been in a couple decades. So there is capacity for things to continue to do well. Optimism with the vaccines is going to help that happen. So we actually think markets will continue to trend higher into 2021. Use the pullbacks as opportunities to get in on maybe some of the names you've missed out on over the last couple quarters.
Victoria, how much do you have to change your thesis if Congress does not pass that fiscal support bill, or frankly, if President Trump vetoes the one that they already passed?
So our macro thesis changes, right? The idea that we're going to see things continue to do better in the first and second quarter of next year, that will have to get shifted later into 2021 and be a second half story. I know earlier you were talking about the two halves of 2021. It becomes a much later story. But I don't think it changes the idea of what we're buying in our portfolios for our clients. We have a shift towards the growth component, a tilt towards that, even though we also have value and cyclical names. So those growth names will continue to do well, those names that have to go around 5G, business infrastructure. So that will continue, but our macro thought about how long it's going to take us to see the recovery get shifted back a couple quarters.
Does the Georgia election on January 5th affect what your outlook looks like for certain sectors or specific names?
You know, it's interesting. I was actually just talking with someone on our sales and distribution team yesterday. We were putting together a presentation for clients in the end of January. I said, we can't put together anything until after the Georgia elections because it does change the thesis. That probably more so than anything else, in the sense that if you don't have that divided government and you have more of a full Democratic government, then you worry about what is that for healthcare? How does that affect our healthcare names? What does that mean in regards to energy? Now, we're avoiding energy names or oil and gas names right now. We're looking at more kind of renewable energy like a Nextera. That, I think, would be a benefit because we'll probably see new regulations around energy. There will be more of a focus on kind of green energy. So we would be looking at some of those names if we see the Georgia elections go both to the Democrats.
Victoria Fernandez, thank you so much. I will just ask you, how long did it take you to decorate the tree?
Well, I think it was longer than Tom. Apparently his isn't decorated yet. So I had the kids help me. We did it in a couple hours.
Well, he actually made a Lego Yoda because he failed to order one to put on the top of it. So we'll be keeping track and bringing some surveillance exclusives on that. Thank you so much, Victoria Fernandez. Bloomberg's Abigail Doolittle joining us now with a look at the stocks moving ahead of the opening bell. Abigail.
Lisa, let's start out with one of the big stock stories this morning, and that is Alibaba. Shares of the ADR are plunging in the pre-market. This, of course, on the big story that China is accusing the company of monopolistic type behaviors or looking into antitrust activity, stepping up scrutiny of the country's fast-growing internet companies overall, and really focusing in on Jack Ma's e-commerce giant, again, probing alleged monopoly. There aren't a lot of details, but it does appear to have to do with investigating agreements that prevent some of the merchants on Alibaba from selling on other platforms. So we have other names following in addition, including JD.com, Baidu.com. However, here in the U.S., we do have the reflation trade seemingly on still because we have Occidental Petroleum trading higher, even though oil is down. We have JP Morgan up, even though yields are about flat. And then the travel stocks, American Airlines at least getting a nice bid, up 1%. Carnival Cruise up just a little bit, but nonetheless, in green on the screen for this shortened holiday day.
Abigail Doolittle, thank you so much. Coming up, John's away. We're going to talk about Brexit developments dominating a holiday lull in risk assets. That conversation up next with Invesco's Brian Levitt. I'm sure we'll talk about other things, including how far the momentum trade can potentially go, which we are seeing, as Abigail said, in markets today. We've got about 19 minutes to go before the open. Risk on dominating. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets, The Open. We have some breaking news. Abigail Doolittle joining us now.
Well, Lisa, we do have breaking news, and we have a redhead crossing to Bloomberg just moments ago saying that the Democrats' bid for the $2,000 relief checks fails in the House. This, of course, creates a good deal of uncertainty in terms of what could be next. We're not seeing much of a reaction to stocks, so I'm going to turn it back to you, Lisa.
Yeah, so basically here we were talking about how the Democrats were picking up on President Trump and his trying to get that $2,000 relief check rather than the $600 relief check as currently in the bipartisan agreement. That has failed in the House, which still has a Democratic majority. Not seeing a big market reaction in stocks and bonds. You're seeing yields tick a little bit lower, which is kind of interesting. Meanwhile, over on the other side of the pond, we also have Brexit talks ongoing. It's the year of politics hitting both sides of the sag as we've got basically fishing rights back in the crosshairs. Bloomberg's Kaylee Lyons joins us with the latest. We're not out of the woods. It's still an issue. What's going on?
Yeah, Lisa, I really, really wish I could tell you that this deal was done, dusted, and we can all go home. But unfortunately, that is not the case. Now, we know an outline of the deal has been agreed to. We got that news at 11 a.m. Eastern time yesterday, but no finalized deal has happened as of yet. We know they broadly have agreed to an outline on fisheries, but it seems to be the specifics of those details, like the number of each species EU boats will be able to catch in UK waters, really the nitty-gritty stuff that is holding us up here and causing the delay. We have no idea when, in eventuality, a deal will actually be concluded. And of course, the EU will formally exit, or the UK will formally exit the EU single market a week from tomorrow. So the clock is still ticking. And the financial market's obviously trying to digest all of this, Lisa. In FX, the cable rate seems to be pricing in a bit of optimism that this deal will eventually be finalized today, up about 0.7%, granted off the highs of the session, but still up about 1.5%. over the last 2 days and hovering around the highest level since April of 2018. Strategists, though, saying that most of the good news has already been priced in, so that rally in the pound may be capped around these levels, especially considering the other economic challenges apart from Brexit that the UK still faces. Where the outsized move has really been is in the bond market. In the Wednesday session, gilt yields went soaring. The 10-year yield up about 10 basis points, which was the biggest move upward since back in March. That unwound a touch today, coming in around 3 basis points. Gilt yield now sitting around 0.25% as we're still waiting and watching and waiting, Lisa, for that finalized deal.
Yeah, we've been waiting for almost 5 years. Let's keep going with that. Thank you so much. Meanwhile, Invesco's Brian Levitt looking ahead to the year that comes, 2021. We can all look ahead to that. The economic recovery trade will play out in 2021, resulting in a modestly steeper yield curve and sound market gains led by cyclicals. Brian joining us now. Brian, how uncomfortable are you with how many people agree with you on this call?
Yeah, it's a little bit worrisome. I mean, it does seem to be the consensus call, but the reality is we're coming out of from a very depressed place as a result of the great shutdown. We have policy that's very accommodative, and we've got a very wide output gap, which suggests that policy is going to be accommodative for years to come. We also know that there's a lot of pent-up demand that exists in the system, and people are clamoring to get back to some level of normalcy. So the economy is very likely to recover in 2021, which would have you expecting higher rates, favoring cyclicals. I suppose the less than consensus call is to say that, that's a trade. And then you go back to what is just another modest expansion and back to all the things that worked from 2012 through 2019.
Let's talk about policy volatility, because I find it interesting that we get these headlines. The Democrats reject the the House rejects the $2,000 bid for individuals to receive in their homes, as President Trump has said. Whether he's going to veto this $900 billion fiscal support package, these are all potential factors for markets. Markets are not moving. Is there just exhaustion here?
Well, there may be exhaustion, or it might just be, you go back to what it was said that Churchill said, that Americans always do the right thing, but only after exhausting all other options. And perhaps we're exhausting options right now. You know, I remind investors, it might not feel that comforting on days like today, but I remind investors that we saw a lot of sausage making too from 2009 through 2019 as we dealt with government shutdowns and fiscal cliffs and sequestration. And for investors, what mattered most was keeping their eye on the larger picture, which was overly accommodative policy accommodations and an economy that was recovering from a very depressed level. It feels like a fairly similar environment. So as an investor, I wouldn't get too caught up in the day-to-day of this. I'd come back to that Churchill line. We likely will see fiscal relief here. But yeah, to the extent that policy uncertainty persists, you would expect the market to respond to that.
So the call about reflation, I'm looking right now at a yield curve, the gap between 10-year and 2-year Treasury yields. It's actually at the highest right now since 2018 or right around there. And I'm wondering what it would take to go further in terms of the economic data or bringing forward the vaccination schedule. What do you currently have baked into your models with respect to both of those affairs?
Yeah, I mean, the 10-year rate at what, 95 basis points or 90 to 95 basis points where we've been is a bit overbought compared to the real potential growth trajectory of this country. So, you know, if the economy over the next 10 years is going to grow 2% a year, then 90 basis points seems overbought. The challenge is, as we roll out the vaccines, as the economy starts to pick up some momentum, you're likely to see rates go up. But the challenge is rates are low globally and investors are looking for income. So I'm hard pressed to imagine rates getting to the real trajectory of this economy. And, you know, if you get to 1.25, if you get to 1.5, that could be the end of that move in interest rates. And so that could be the surprise for investors, that you just don't get this inflationary pressure. You don't get this move up in rates. And I would say that we're still very much in a low for long camp with regards to inflation and rates. We're just in an environment right now where tactically, or maybe even a bit cyclically, you could see rates come up from where they are now.
I ask because this has been a huge reason behind the rotation into financials of late. In addition to the Fed saying, go ahead, you guys could buy your shares back again because you're doing just fine. But how much more do you think that has to go?
Yeah, it has a bit more to go. Again, if rates go from, again, 95 basis points to 125 or 150, then there's room to go. But I would remind investors not to change their long-term investment thesis. The long-term investment thesis is still a world where we're going to struggle to find growth. And in that type of world, you don't see interest rates go up meaningfully. So you're going to have to search for growth wherever you find it. That's going to be in the United States. That's going to be around the world. But it's unlikely to be driven by sectors or industries of the market that require significant sustained improvements in economic activity. And so while things like financials and energy could be a very nice tactical trade, they're unlikely to lead the market over multi-year periods.
Real quick, you buying Bitcoin?
No, I'm not buying Bitcoin. I mean, I know if you look at the if you look at the charts, on the technicals, it looks like it's breaking out. I've missed it the whole way. The reality is, I think of Bitcoin from its earliest days as, investors believing the dollar was going to collapse, the banking system was going to collapse, there was going to be massive inflation. None of that happened. So it seems to me that the earliest drivers behind it didn't play out. Somehow it still broke through 20,000 or 23,000 or wherever we are. To me, I'm perfectly happy owning U.S. dollar debt. I'm perfectly happy earning income in U.S. dollars. I'm unlikely to speculate. That doesn't mean I'm not going to be wrong, but that's not my investment thesis.
Brian Levitt, thank you so much, and have a wonderful holiday and new year. Coming up, the analyst action you need to know, that's next in our morning calls. And later, gearing up for Apple's push into electric vehicles. That conversation is still ahead with Dan Ives of Wedbush. From New York, this is Bloomberg.
their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
I'm Lisa Abramowitz in for Jonathan Farrow. This is the countdown to the open. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, BMO raising its price target on Paychex to $93 following better than expected earnings. The analyst maintaining its market perform rating, seeing an improvement in trends. Next up, Citi raising its price target in Estee Lauder to $258 from $239. The analyst citing higher market multiples. And finally, B of A naming Occidental its top exploration and production pick for 2021. The analyst expecting the company to be a recovery play, saying it's past the worst of a commodity downturn. Coming up, Apple paving its way into the electric vehicle market. We'll discuss possible partnerships with Wedbush's Dan Ives. The opening bell up next, and this is Bloomberg.
Chinese brands now account for 7 of the country's top 10 cosmetics lines, up from just 3 in 2017. That has pushed out foreign brands like L'Oreal's Maybelline, which has seen its share of China's makeup market plunge by half since 2010. For more, we're joined by Bloomberg editor Bruce Einhorn. Bruce, why the drop?
Chinese brands are becoming much more adept at reaching Chinese consumers, especially now at a time when more consumers are reluctant to go shopping outside. People are spending more time at home. People are spending more time on social media. Chinese brands are very good at using social media, using live streaming, using other things in order to market. Chinese brands also tend to be less expensive. And so at a time when the economy is struggling a bit, there's a lot of uncertainty, people are more budget conscious, Chinese brands have a bit more of an advantage.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is the open on Bloomberg Television. We have just 20 seconds to go before the market open. We are seeing that momentum trade absolutely bleed into Christmas Eve. We see S&P up 0.1%, and Russell, the Russell 2000 beating that at 0.4%. There you go. You hear the opening bell, and we do open around there. NASDAQ basically flat on the day. We have seen that a stay-at-home trade persistently underperform on these risk-on days. If you flip up the board and take a look at what's going on across assets, you could take a look at yields actually heading a little lower. They're basically doing nothing. They've been red and green all day, but it's interesting that you're not seeing the same sort of risk-on translate there, whereas the dollar also fluctuating. Very much a quiet day here ahead of Christmas Eve. Let's head to the markets desk. Bloomberg's Kaylee Lyons joining us now. Kaylee.
Let's take a look at some stocks on the move, Lisa, starting with Alibaba. The shares got absolutely crushed in the Asian session, and the ADRs here in the U.S. at the open falling another 11%. This is after China kicked off an investigation into alleged monopolistic practices at the company. Marks the formal start of the Communist Party's crackdown of the internet giant. Bloomberg Intelligence saying that the probe is a warning that the winds have shifted, and you're seeing another U.S.-listed Chinese internet stock, JD.com, falling today in sympathy. Now, Square is up about 1.6%. This on reports that it has held talks to acquire Tidal, which is Jay-Z's music streaming service, would be a part of a push to diversify, help compete with the likes of Apple Music and Spotify, though negotiations may not actually result in a deal. And Occidental Petroleum getting a little modest lift here as well, up about 0.5%. This was named as the top E&P pick for 2021 over at Bank of America. The stock has doubled since its low at the end of October. Still, though, down around 60% since it bought Anadarko in 2019. Finally, just a quick check on the vaccine stocks this morning. The U.S. has now vaccinated 1 million people. The program, though, is going slower than expected, and it really has turned into a sell the news phenomenon for vaccine makers. Moderna down 17% over the last 2 weeks, down another 2% this morning. A slight lift here for Pfizer and AstraZeneca, even though Operation Warp Speed says Pfizer's vaccine is causing more allergic reactions than expected. So we continue to keep an eye on those vaccine stocks and the vaccination program itself, Lisa.
Kaylee, thank you so much. Meanwhile, Wall Street expecting value stocks to replace tech dominance in a much anticipated recovery trade to come next year. BlackRock's Kate Moore going against the grain, seeing more room for the sector to run.
Equities are going to be the best performing asset class in 2021. There's room to own more of the tech stories, the platforms, the software, the digital enablers that have really sort of shown in throughout 2020, and I think are going to be in high demand throughout the course of next year.
Here's Bloomberg's Abigail Doolittle with more.
Well, Lisa, let's take a look at why Kate Moore is going against the grain, because over the last 3 or 4 months, we've heard so much about the reopening and the reflation trade, those cyclical sectors, and not surprisingly, these are the top sectors over the last 3 months, basically in this fourth quarter. Energy, financials, and industrials, those are the top sectors, up double digits, really very impressive. That energy index up about 26%, financials up 24%, industrials up 17%, not so shabby. Those are the type of gains that you usually associate with tech. However, to Kate Moore's point, if we go into the Bloomberg terminal and take a look at the relationship between value and growth, we will see that for most of this year, value has been getting pummeled relative to growth, down in a big way, down between January into August. However, between September, October, and November, value started to outperform. December, though, growth is back on top as value starts to underperform once again. And this has everything to do with earnings. We don't just have an expectation for a recovery in value earnings. We have an expectation that earnings for these tech stocks are continue to be on fire. In fact, if we take a look at the growth for the first quarter alone that's been revised, at the end of November, it was up 14%. Today, it's up closer to 17%. So that's big growth. The top point boost in December, Apple, Lisa, not surprisingly, then Microsoft, those big names still on top, really helping out. So it'll be interesting to see how it does play out in 2021.
Abigail, thank you so much. Wedbush's Dan Ives expecting Apple to announce a strategic EV partnership in 2021, writing, quote, "The company has been working for years around this autonomous vision. A potential strategic partnership with an established EV player would be a golden partnership for the next decade." He has now performed rating on the stock and a $160 price target. Dan joining us now. Dan, this comes on the heels of Reuters reporting earlier this week that Apple had plans to build a self-driving vehicle by 2024 for consumers. How does this partnership that you're talking about fit into that?
I think that's the first step in terms of a partnership, strategic collaboration. I think that's how Apple ultimately dives into the deep end of the pool on EVs. They potentially could start making their own cars later in the decade, but that's the core DNA of Cook and Cupertino in terms of going after this massive market opportunity. And I view a partnership with the likes of a Tesla, a VW is likely the first step as they go after EV, especially from a vertical integration and autonomous perspective.
What does partnership mean?
Call it a JV, strategic partnership. I view it very similar to what I view Baidu doing in China. I think that's really the smarter strategy, where you could have a branding in terms of their software, their autonomous, their LiDAR in an OEM automobile, in terms of on an EV perspective. I think that's from an investor perspective, that's what they want to see. You don't want to see a major gross margin hit and them to start making cars go into the next few years. I think strategic partnership is what they start off with.
It's interesting. I was looking at some comments that Volkswagen CEO made yesterday. He was saying that the biggest competition for big automakers is not coming from the traditional Detroit players or those around the world, but rather from the big tech world. And they said, for example, saying that we look forward to our new competitors who will certainly accelerate the change in our industry and bring in new skills. What will Apple be looking for in terms of its partner and how it will put its imprint on this industry?
Yeah, well, I think specifically they'll be bringing autonomous, and in terms of autonomous as well as our ecosystem. You're talking about, a golden brand, an unparalleled install base, and I think what they're looking for is distribution, a partner, as well as the economics that would make this work. And they need to make sure that, off the bat, that's a successful partnership. And I think if you look at Apple, how they're gonna more cautious approach here. If you could Project Titan the last 5-6 years, a lot of twists and turns, but I believe in EV. We're talking about $1 trillion market the next decade. Biggest consumer product company out there. I don't view them as looking at this from the outside in. That's why I do believe, a year from now, they've already announced some EV partnership. We believe Tesla likely being the winning candidate.
We're going to come back with this in a minute. I'm just looking right now. I wanted to bring you some breaking news that Brexit negotiators have finalized a trade deal, and you are seeing sterling gain in against the dollar and against the euro, as we do see people looking toward perhaps some resolution. We will get more on that in just a bit. Dan, I do want to just continue, though, this idea of Tesla being the winner. Tesla shares dropped, and some people said that perhaps it was because Apple was rumored to be developing its autonomous car, that perhaps that was the reason for Tesla's price decline. Of course, it came after a lot of volatility with its inclusion in the S&P 500. Do you think that this poses a material risk to Tesla, or do you think that it might be Tesla that ends up as the beneficiary?
Yeah, I view Tesla's ultimately as a winner because we believe a partnership likely they strike Apple with Tesla. I don't view this necessarily as a negative, and I view, if you look at Apple from a leadership perspective, it could further be the torch runner on EV. It's 3% of automobile sales today. I think goes to 10% by 2025. If you look at Tesla, I think there's a sell on the news post S&P 500 inclusion after the parabolic run. Right now in the EV market, it continues to be Tesla's lead by miles. And I think right now, $1,000 bull case, if you look at Tesla, as they continue to execute, specifically China being what I view as the hearts and lungs of the bull story.
So I was reading a post by Peter Atwater, who's a professor at William and Mary College, and he was saying that Tesla could be a Trojan horse for the S&P 500. It's been incredibly volatile, and people have been suggesting that it could end up being punctured in terms of its valuation. I mean, it's increased. I think it's returned, 750% or something insane this year. What's your argument against that? Why do you say to people, you're wrong, you've missed the boat, and you're going to keep missing the boat if that's your view?
Well, if you look at S&P 500, I view that just another feather in the cap for Musk and the Tesla story. Validation in terms of profitability, as well as Teflon-like demand that we've seen through the COVID pandemic. Look, our view on EVs, and it's not necessarily just Tesla. You can look at GM, Fisk, or others, of course, China, NIO, Xpeng. I mean, I think it's a golden age for EVs. And I think that's when investors continue to play. And these are stocks that trade not at auto multiples, but technology multiples. And I view this over the coming years. It's going to be a continued penetration story. But right now, it's Tesla's world and everyone else is paying rent in the EV market.
Actually, quite literally. Just looking ahead to 2021, a lot of people are talking about how big tech should underperform as people rotate into higher momentum stocks that have perhaps lagged behind this year. Do you agree with that, or do you think that big tech and the universe that has done the best this year will continue to do so next year?
Yeah, I strongly disagree that it's going to underperform. I mean, my view, it's some of the most transformational growth trends, cybersecurity, you look at the SolarWinds hack, cloud, and FANG. I believe a year from now, tech stocks are up another 25%, plus. So I view it, even though you have regulatory and U.S.-China cold tech war, it's a scarcity of growth. And right now, many of these are getting re-rated in tech. That's why still a bright green light to own tech going into next year.
Dan Ives, thank you so much. Have a wonderful Christmas, and we'll speak with you in the new year. Right now, we did get that headline that Brexit negotiators have finalized a trade deal. This comes after a will they or will they not with respect to fisheries drama earlier today. Let's go to Abigail Doolittle for more. Abigail.
Well, Lisa, absolutely. We do have these headlines crossing that the Brexit negotiators have finalized a trade deal. And I'm just looking at some of these headlines on the Bloomberg. And as you mentioned yesterday, it was such a small part from an economic standpoint, haggling over fish, but that seems to be solved. So some of the headlines, we're looking for the details here, the extent to see which side, how each side got what they wanted, how the businesses are racing to prepare for the changes. It looks like Boris Johnson, the deal will allow him to say Britain has reclaimed sovereignty over its laws. The agreement avoids poisoning relations with Britain for years to come. That's just a few of the headlines that are crossing here. Relative to the market reaction, of course, we did have sterling initially pop and the euro fall. It now seems to be reversing at this point. Still a little bit of strength there for the pound versus the dollar, perhaps speaking to those positive headlines about Boris Johnson, but the idea that this deal is a positive.
Abigail Doolittle, thank you so much. And the lack of market movement also, I mean, it's not a significant move. It could also have to do with the fact that people are basically taking out the price of a hard Brexit, now looking at the fundamental economy and trying to see what's to come in 2021. Let's head back to the markets desk. Kaylee Lyons joining us now with more. Kaylee.
Lisa, I want to talk about the financials because you have stocks like Citi, JP Morgan, Bank of America, Wells Fargo. They're all ticking lower after the opening bell today, but it's really just an unwinding a bit of some of the remarkable gains we have seen this quarter. Just yesterday, those first three banks I mentioned all hit their highest level since February. All of these names up between 30 and 40% over the last 3 months. Of course, the Fed allowing these banks to resume share buybacks in the first quarter next year, the latest upside catalyst, but you also have the broader market rotation into the value trade that benefits the financial steeper yield curve does as well. That has all led the KBW Bank Index to its best quarter ever, Lisa, even if banks are under a little bit of pressure in this Christmas Eve session.
Kaylee, thank you so much. Coming up, the 2021 consensus trade, buy stocks. That conversation coming up next with John Hurdle of Hurdle Callaghan. In the markets, we are seeing that consensus borne out as people rotate into risk. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink
how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Heading into Christmas Eve, this is Bloomberg The Open, looking toward a 2021 where the consensus call is to buy stocks, and it's tempting bond investors to throw in the towel. Bonds struggling to keep up with equity returns, continuing to lock in record low yields across markets. For more, let's bring in Bloomberg's Abigail Doolittle.
Well, Lisa, that is certainly true over the long term. If we take a look at what's happening over the last 10 years, we will see stocks are clearly the big winner. We have the S&P 500 up about 194% as investors simply want in stocks, despite the correction and this brief bear market that we had in 2016, 2018, and then, of course, this year. Unbelievable that you can have those sorts of gains. And then we have very nice gains also for corporate bonds, but treasuries, Lisa, the clear loser. If you can call up 15% over 10 years, the loser, but they are clearly lagging. As for those stock gains, Lisa, this is one of my favorite charts in the Bloomberg terminal, because what is the driver of stocks being up so much? Perhaps liquidity. If we take a look at this chart, we are going to see a very strong correlation between the S&P 500 climbing over the last 10 years and global M2 simply skyrocketing with that liquidity from the Fed and other central banks, that expectation that the animal spirits will be stirred. That certainly has been the case. And this year, of course, technology, the big winner, the NASDAQ leading the way above the Russell 2000, the S&P 500. However, Lisa, today it's the Russell 2000 putting in yet another all-time high.
Thank you so much, Abigail Doolittle. When we get those charts, we will put them up and show you, and you should put about it on Twitter because it's a good point and it's one that has really underpinned a lot of the market action. John Hurdle of Hurdle Callahan making his bull case for a global stock rally in 2021, citing three catalysts: low interest rates, as Abigail was talking about, the digital transformation, and globalization. John joining us now. Let's talk about the interest rates, in particular the negative real yields that we have been seeing get more negative in the United States. How much is that the entire story behind the risk appetite that we've seen?
Well, Lisa, I think of you as a fixed income expert, and all great investors start with fixed income and the risk-free rate. And this is at a historic level. And even if you see it trading higher, it's still going to be historically low. So it is a huge part of the story, and it seems like it's in place for the foreseeable future. And it's not just about the Fed. It's about global fundamentals. So declining population growth, and we just talked about liquidity. Interest rates are the price of money. So if there is a lot more supply of money than there is demand for money, we're likely to have low interest rates as far as the eye can see.
There's a challenge for some of your clients, so the pension funds and the other institutions that are counting on a certain type of return. In this kind of environment, you're bringing forward that return to buy stocks and bonds at elevated valuations. What do you tell them in terms of what they should expect going forward?
Much lower than ever before. So if you start with a risk-free rate that is historically low, and then you have a risk premium on top of that, you still have historically low stocks and bond returns going forward. So, you have interviewed Howard Marks in the past, and he's recently written about that, where it's not that stocks, in our opinion, are overpriced relative to bonds, but the whole thing is shifted down. So you are correct. We're chief investment officers, and we're really managing serious money for people across the United States in 38 states. And they have a mission to fulfill. So whether it's a family that's philanthropic and worrying about security, or it's a college endowment that has spending plus inflation to try and achieve, harder than ever to do that. So you really got to do everything else you can, including look for opportunities to capture inefficiencies in the market, whether it's private markets or public markets where you have high conviction managers that they can add something on top of the broad market exposures.
How many of them are moving into dividend paying stocks in lieu of bonds?
Well, you know, that's a complicated question because dividend stocks in lieu of bonds is not always a great trade, but it on the surface is appealing. And if you have dividends that are secure, it's something to look at. But it is not a broad trend that we see in the marketplace. It's clearly true that dividends stocks sort of empirically appreciate when interest rates are low or benefit from low interest rates. But it's not always true. So that's not a panacea for sure. And, you know, it's a big challenge. But the long-term trend is clearly favoring stocks. And what we're seeing now is that none of us working today have ever operated in these negative real rate environment. And when people talk about the PE multiple on the stocks being high, that's true, but not in the context of these interest rates. So once again, it's not expensive relative to bonds, but it's elevated across the board, meaning low rates, low returns going forward.
You talked about the inefficiencies in markets that a lot of investors are trying to exploit to get the alpha that could possibly get them to the 6, 7, 8% bogeys of the past. And I'm wondering where those inefficiencies really are, given the mountain of money that's moved into every strategy. Where are they?
Well, you know, it's a matter of degrees. Europe is less efficient than the United States. Emerging markets are less efficient than Europe. You see this rotation happening, and it's fascinating, really, where the strength of the economy is starting to disperse across the globe, which is, you see that in a weakening dollar. So it's nothing wrong with the United States. It's just that we're starting to see a rotation into more cyclical, more industrial names. And if you look at the U.S. performance over the last 10 years relative to the rest of the world, it's really about our tech sector. So if you take out our tech sector and look at Europe, for example, if you take out our tech stocks, our performance would be about like Europe. So when you see rotation in this country into the industrials and so forth, you know that Europe is a much more cyclical, much more industrially focused economy and market, and very sensitive in Germany's case to what's going on in China, which has been robust.
Yeah.
So, you know, there's this rotation and looking for opportunities, looking for inefficiency.
And yet, we're not necessarily seeing a big pop in the pound versus either the euro or the dollar. It's still below session highs. Have we basically priced out the chances of a hard Brexit at this point, which is basically what this agreement seems to avoid?
Yeah, I think that's probably what's happening here with the market. Of course, you know, many market participants, it's late in the day here in London, the stock market is closed. Many traders would have packed up the holidays. already. So volumes are going to be a little bit light, and they would have positioned themselves before this. But in the way things were going the last few days, there was this expectation that they had to reach some sort of agreement. We had this awful scenes at the port in England in the last few days, with the border shut from France, thousands of trucks backed up on the highway there, and really a feeling that added pressure to the government that we can't go through this sort of added economic chaos in a week's time on top of the economic damage from the pandemic, this self-inflicted one of a very hard Brexit. So I think the market was really expecting them to get there. I think now, as I said, the devil will be in the detail. What are the long-term economic implications for Britain from this deal? And that's what I think we're going to have to unpick in the next few days. And I think investors are going to be looking at that very carefully and our economists will be unpacking that too. What does it mean for growth for Britain going forward? All this wrangling over fish is fair enough, I suppose, symbolically, but that's a tiny part of the economy. The real meaty stuff for investors is going to be things like services, things like financial services, things like manufacturing, and we'll find that out in the coming days.
Yeah, just to give you a sense of how much of a tiny portion of the economy fisheries is, it accounts for 0.1% of trade of just goods with the European Union, let alone goods and services, which is a more significant component of the economy, as Anna Edwards was laying out earlier this morning on Bloomberg Surveillance. I'm wondering, David, based though on fisheries is a lot of political pressure, and it actually is how Boris Johnson may or may not be perceived tomorrow morning after people read through all of the agreement documents, and people were coming out and saying that he gave up too much. How will it be viewed? Did he concede in order to get this deal done?
I mean, without a doubt, he has conceded ground on this. But it is fair to also say that the European Union ceded ground as well. If you look at where their positions were at the beginning of this, the Europeans were demanding no change in the access for their boats to British water. And the Brits were demanding something like 80% of the catch be taken back. Now, it looks like the number they've come to is somewhere in the middle there, maybe slightly closer to the European side. And certainly the compromise that seems to have happened in the last...
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should. months, we have met often with van der Leyen, and here is the head of the European Commission.
It was a long and winding road, but we have got a good deal to show for it. It is fair, it is a balanced deal, and it is the right and responsible thing to do for both sides. Les négociations ont été très difficiles, avec de tels enjeux pour tant de monde. C'était un accord pour lequel il fallait se battre. Il permettra d'éviter des perturbations majeures pour les travailleurs, les entreprises et les voyageurs après le 1er janvier. Il protégera les intérêts européens et cet accord est aussi, je le crois, dans l'intérêt du Royaume-Uni. Il posera des fondations solides d'un nouveau départ avec un ami de longue date. Et enfin, il nous permettra aujourd'hui de nous assurer que nous pouvons finalement laisser le Brexit derrière nous. L'Europe continue de s'avancer.
Talking about the planned agreement, the trade deal we have between the European Union and the UK on Christmas Eve, just a week before the UK was scheduled to crash out. So we're listening in Brussels right now.
Wie wichtig das ist, das sieht man diesem Abkommen an, Kapitel für Kapitel und Zeile für Zeile. Let me give you 3 examples. First of all, competition in our single market will be fair and remain so. The EU rules and standards will be respected. We have effective tools to react if fair competition is distorted and impacts our trade. Secondly, we will continue cooperating with the UK in all areas of mutual interest. For example, in the field of climate change, energy, security, and transport. Together, we still achieve more than we do apart. And thirdly, we have secured 5.5 years of full predictability for our fishing communities and strong tools to incentivize to remain so. Of course, this whole debate has always been about sovereignty. But we should cut through the sound bites and ask ourselves what sovereignty actually means in the 21st century. For me, it is about being able to seamlessly do work, travel, study, and do business in 27 countries. It is about pooling our strength and speaking together in a world full of great powers. And in a time of crisis, it is about pulling each other up instead of trying to get back to your feet alone. And the European Union shows how this works in practice. And no deal in the world can change reality or gravity in today's economy and today's world. We are one of the giants. Die Europäische Union ist gut auf den Brexit vorbereitet. Wir wissen, dass dieses Abkommen nicht alle Probleme aus der Welt schafft. Wir haben eng mit Behörden und Unternehmen zusammengearbeitet, um sicherzustellen, dass sie vorbereitet sind. Wir haben in unserem neuen Haushalt 5 Milliarden Euro vorgesehen. Damit wollen wir Menschen, Regionen und Wirtschaftsbereiche, die vom Brexit betroffen sind, unterstützen. Time to turn the page and look to the future. The United Kingdom is a third country, but it remains a trusted partner. We are long-standing allies. We share the same value and interests, whether it be the COP26 summit in Glasgow or the upcoming UK G7 and Italian G20 presidencies. The European Union and the United Kingdom will stand shoulder to shoulder to deliver on our common global goals. Ce moment marque l'aboutissement.
And this moment marks the end of a long voyage. I would like to thank our chief negotiator, Michel Barnier and his team and Stephanie Rizzo for their tireless efforts, their endurance, their professionalism.
Thank David Frost and Tim Barrow for having been tough but fair negotiating partners. And I'm grateful to all our member states and the European Parliament for their trust and their support. I will now convene the college. And ladies and gentlemen, at the end of a successful negotiations journey, I normally feel joy. But today, I only feel quite satisfaction and, frankly speaking, relief. I know this is a difficult day for some. And to our friends in the United Kingdom, I want to say, parting is such sweet sorrow. But to use a line from T.S. Eliot, what we call the beginning is often the end. And to make an end is to make a beginning. So to all Europeans, I say, it is time to leave Brexit behind. Our future is made in Europe. Thank you so much.
Thank you very much, President. Now allow me to give the floor to our Chief Negotiator, Michel Barnier.
Thank you, Madam President, dear Ursula. The clock is no longer ticking.